Hello, hello. I think you're the first one in. Sipping beer. Technically 1 o'clock here. All right. Let's have a look at the damage control. It's funny we're getting liquidity or open interest entering the market at some very different times. I have no idea what this means, but generally speaking, you used to only get open interest really piling in just before major markets, but now we're sort of getting it just piling in around daily open, which is different. Something is different. So maybe it's a stepping stone towards markets going 24/7 and they're starting to adjust the way they do things. Who knows? Yeah, that's kind of what I think too. I'll just let's just have a quick look, eh? So yeah, above trend on trend. So doesn't really tell us anything definitive. What else you got going on up there? Not much. So on Sol BTC, it's really, does this candle touch that line? If it does, great. You've got another day where it could just close over it and keep going up. If it doesn't touch it, then the next time it does, it'll reject. So that's all we're really seeing there. That's not a great closure for the total market cap, being down under the trend, but it hasn't lost these levels yet. So they're not hard closed, but it could still come down here, bounce off there, and travel back up to the trend. Try to have another go at it. Another go at maybe getting through that 1.54. So could get a little pullback, little bounce, or a little fake pump, and then a push down. Same thing there, no hold level, wrong side of trend. So if it doesn't bounce off the break level, then it's toast. It'll just end up going down underneath. It could come all the way back down to here. So yeah, wrong side of trend, wrong side of range trend. Hasn't hard closed break level, back under the main trend. Pretty scammy, really. If that was to push up, it would be like a repeater yesterday, really. It would just be pushing up through all the resistance, most likely just to come back down. So see if they try to do the same thing 2 days in a row or whether they just go down. So really for that to make any decent movement, it has to get up over that 115 area, close over top of that range trend. You're not close under the break level, under trend. So if this pushes up, it just runs into rejection. It actually, you've got two trends in here now as well. So when you start to get trends condensing like that, it means that it failed. So this candle failed to even get to the outer trend, which means the next time it goes into here, you've got two things to apply sell pressure. So it's just kind of saying that that level up the top there is probably bigger resistance now than it was yesterday. Most logical thing for that to do is to come back to the trend. Although that could be it. Like If it bounces off that trend, then targets are up pretty high. More resistance. Okay, so this one's interesting. So if the price goes down into this area, it can probably come back up to here. Might be like something like that. Never managed to get back up there. Stuck under there. Could bounce off that 112. Could reject off 114. That's good. And bad. So it may just do some kind of move in here based on that. So a little start of the day pump. So that's at resistance, so we'd have to push through that. Broken first touch break level to the upside. Yeah, so there's your start of the day pump. Yeah, that could go up a little bit. That could go up, but it's under resistance. That's got a hold level to reject off 16,395. 116395. That's still under the downtrend. So 117, 118, reject. Okay, so that's the one that is kind of good and bad to get today. So hold level in that 112, 500 area, but a new topside range trend to target. So this is going to want to do something between there and there, or later. You know, it could be over here. Question is, how far down does it go before it does that? So this one time frame pretty much could tell you everything that's going to happen, just not the order of which it's going to happen, but you could do a little move up into this resistance as an example. Then you could come and take a hell of a dive down to the prior trend because we're under that support trend. But this hold is going to want to go up here. So we could come all the way down to there and then up to there. And that would be not so bad, and it would give it a chance to close over the top of that and then maybe get some continuation. What could be quite bearish is if it just does this. So that's under all the resistance. On the line, but failed accumulation to reach the prior trend. Yeah, especially if you've got magnet tool on. So if you, because magnet tool just makes it stick to everything. It's really hard to get good brush strokes. So yeah, this up here, the fact that this candle did not make it back to that topside trend means that you are sort of getting ready to do that. And so what normally happens with these is they get condensed and then they get swept and then you go into some kind of major downtrend. So price could come through here and then whee. And this new trend is the kind of thing that could get it there. So yeah, it could dip to the trend or down here and then pump up to something in these levels. And that would be the end of that. Okay, like so. So closed above the break level, not hard close, closed above the prior broken trend, which seems to be what it's bouncing off now. That little faint red dotted line coming through there. Don't blame me if you can't see that. I can hardly even see that. Okay, so that might try to push, but that 200 level, or certainly up there at 204, is still resistance. So need to start closing up over these levels if we want this thing to really be able to go up. That's just in the middle of nowhere, but hasn't touched that range trend yet. So that's a reason to reject a second time from 204. So maybe make a double top, something along those lines. And it's coming from the wrong side of resistance again. So unless it can stay closed over those areas. Alert's going off. That's still inside that range, but it's not hard closed back inside that range. Main challenge is going to be getting over 200s and 204s, so same. That could create a move back up, double top or something similar. Rejection of the backside of the range trend, prior broken trend. It's on the downtrend, so as long as this can stay up, then the next candle can be quite an impressive candle because it can open above resistance, but that's not for another 4 days. that do? Yeah, it doesn't mean much. That could just reject off 200. It's not much. So hold level at 193.961. That makes a bit of sense because the 5-day move on the exchange is trying to push down to 194. So that will push into this hold, and then although this could actually bounce to 206 right now. So it did close just above the wick, so that's very subtle, but just there. So I mean, if we get some kind of, if there's a reason for them to hit the up button, that'll go to 206. Yes. So that's free of the downtrend, but still would have to get over 204. That's free of the downtrend, stuck in between. Would reject from 214. It's on the trend. Backside of trends around 211. That's stuck under 204 and under trends. That's stuck under 209 and 206. So that one's got a bit of confluence with that other one. So if this pushes up into, so 206.253 is the hold level which would reject to the trend, which takes you back to that 189. And that lines up with, what was that other one? That lines up with that doing the initial wick bounce. Sometimes they do this, they just, if the candle fully engulfs, it just bounces straight off the wick and goes up to the fib target. So if that was to bounce up to there, that actually means going into that resistance to then dump it. That'd be a nice joke on everybody, eh? Release a bunch of ETFs, get everyone really bullish, go for a little quick move to the upside, and then straight into that dump. Resistance 204 or higher, support 187, 186 to start with, then all the way down there. This is trying to go to 214 already, so it might do that. Because that's actually, it's not far off 214 if it was to liquidate all the short-term liquidity. Closing under 204, sucks. Closed under 209, sucks. Closed under range trend, rejection at either 204 or somewhere above, maybe 217, backside of trend. It could go all the way through, you don't know, but it's got 100 days. It's got a bit of time. Yeah, that'll play out pretty much. Apart from the really high time frame ones, because some of those are the moves are 20, 30%. So the stop loss at 10% might be a little bit out of whack for those, but what you do is put the stop loss under a level that relates to the trade. So we have this. Another one of those 189s. So there's a pretty clear path there to be able to go up to anything above sort of 204, 206, maybe take all that topside liquidity, reject back down, enter into the 189 hold candle again, because this move is in play on so many timeframes already. It just hasn't moved, hasn't gone to the top yet. Yeah, it could bounce off the backside of that trend, 180 or something like that. So unfortunately, it also created this uptrend today. So it could go test that, and that's 120. So it's just this high time frame stuff is just painful, really, because you don't know whether it's going to go up here first or down here first. But if it starts to really pump, that level is danger zone. So 259 level is now an origin level on a 150-day time frame. So it'd be cool to see what that does. Maybe not so cool if you're long the top, but it'd be cool. Okay, and still above the weekly trend. We haven't quite entered the body of the weekly hold candle. Just sort of teased it, didn't quite touch it today. So I mean, just a candle like this has a minimum expected move of 210. It's just whether or not they come deeper into it first, and then it could take several weeks for it to actually play out. And there'd be some refined entries down inside here. And it probably all keys around, or so is all sort of pivoting around how they close the month, really. Because it's all good to have a weekly hold candle that points up, but if they close the month down, then you get a monthly hold candle facing the other way, which is going to make the weekly a little bit delayed. What do you think about FOMC rate cuts? I don't know. FOMC is probably why the price action is the way it is at the moment. Like, why is it sitting in a tight range? Why is it going up and down by a few dollars? It's to get liquidity in both directions. So whatever happens at FOMC, it'll just probably wick both sides. So gotta love reverse trends, eh? this isn't too bad. It's created a origin reversal level down here. So this was that dump, that started happening as they went into daily close, trying to position everything. And then once they got to about here, this is clearly where they wanted to turn it around again, and then started creating the reversal structure, and it's gone up and tested that trend. So the next candle could reject or sneak above the trends and then keep going up. It's got this 202 range trend that it broke that it probably wants to retest in the relatively short term. So maybe it goes up to 202, and then it could continue or not. But I'm actually in an AVANT or something. There was this thing this that happened just before our daily close. So this will probably be scalp of the day. It'll be 5, 10, or 12%, depending on how it plays out. So there's a huge gap on this one. The refined entry is down here at 50 cents. So good old shit coin. So if it does do a dump, it'll be all the way back down to here and then up to there, which will be a really good trade if we can get in down here before it reaches there. So, and it may happen because the lower time frame may reject off these first TP levels, send it all the way down into the refined area of the high time frame, and then the high time frame might bring it all the way back up. So that'd be a pretty cool move. Yep, 53% if it comes to the refined entry. Failing that, it's just gonna play out off this level. Good night. Good night. At this rate, the 15 minutes still got to get over 200 even. Thank you. Okay, this could already be trying to reverse. What's that based off? So you've got your whole candle, we've entered it, we've created a new range trend, you've got your opposing whole candle up here, you've got your fib target here. What you can't tell looking at this is whether or not it's already happened in that candle, so we need to put our line on here to show where that opened, and then dial down to a lower time frame, scroll back and yeah, it's already played out. So that's the daily move, entered the 1 there and went through the TP there. So already played out. Which means you can't really look at taking that as a daily move. But what it's doing in here on the lower time frame is it's creating reversal level, reversal level. So it should target, if it gets on the other side of that trend, it should target the next trend or the break level. And it's also got that. So what else we got? Stuck under the range trend. Okay, so that would be a 4-hour origin level down here. No, not really. I mean, bigger time frames are going to take longer to play out, but they're more likely to play out. Okay, so there might be something on this, just on the 1 hour. If it doesn't come back and touch that, and particularly if it doesn't create a hold level, and if another candle does touch it, could create a probably not a huge move. It's either going to be that or it's going to be that, which would be way better. But depends how it closes, because if it closes under this line, comes down and touches that, then it might only just come back to there. If it stays above there and then comes down and hits that, then it's more likely to go up to there. Actually, to be fair, if it closes over that line, it could just go up to there anyway. Just looking at that structurally. And hype's still breaking down. Took a long time for that to break down yesterday. It sat in that area there for basically the whole day. Just snuck in underneath. Um, and I wouldn't take that at this stage. It looks like it might have bounced in there. It's creating resistance. And if you were watching yesterday and I said this wasn't hard closed, I can't remember what level it was, but it was sort of like, no, it's not hard closed. Now, there we go. Better off waiting for a hard close. I don't know. I might be able to add timestamps afterwards if I had them. I'm not too sure. I'm just going to duplicate my screen for a second and see if I can check that out. It looks like you can add them to playlists after the fact. I can't see how you would put timestamps in. Maybe the editor. Edit and apply elements on the timeline. Info cards. No, I don't know. I'm sure AI can probably answer that question for me. Let's see. Can you add timestamps to a live stream recorded on YouTube? Post recording. Yes. I just edit them into the description and then save it. Okay. Oh well. Hey Flynn. Oh, thank you. Which probably means I need a notepad sitting on my desk, eh? Isn't compression wonderful? So if you're just to take a daily scalp on this, it would have just been that prior broken trend that is really hard to see. That just would have been your couple of dollar move after daily open based on where they opened the new candle. Just doesn't give you much. ETH daily and monthly. Let's have a look. It's back over 4096, which is pretty important. One of these levels back here. That one. 4084. Maybe. That's on the 1 hour. 1 day. Might have been 1 week. Where is it? There is some really important level in here somewhere. That one. Yeah, that's not a bad close. Just purely see how it's just come down and just bounced off that weekly level there. So the opposing level to that is this one up here at 4.7, and that one actually as well, 4.6, which is slightly newer. So it'd be really normal for this just to travel from there up to that 4.6. It might just take a little bit of time. Because if we look at it on the daily, that's just a break level. It's not an origin level. That's just a break level, not an origin level. That is a daily origin level, and it's over the top of it now. Thank you. You're welcome. That good sound. Oh, can you hear that alert? That chirp, chirp, chirp type noise. They go off all the time. Yeah, so from a weekly perspective, I would say that there's a pretty high probability that ETH is going to travel back up to 4.6, 6.7. It's oops, Monday. By the way, if you're ever wondering how you place lines on various levels, Mondays are going to be weekly candles, right? So if you're hovering over that and you're on a daily, this candle is the weekly. If that makes sense. So you can sort of just hover over them and go, where was our Monday? There was our Monday previously. Not that I really do this a lot. It's much easier just to switch between different time frames, but you could look at Monday to Monday. So this is a Monday, that's a Monday. Did our weekly finish up or down? Well, it finished down. It's kind of the same as looking at it on here. And say you'd taken, say this fib trade in here, which basically is going straight into a break level. So the target for fib trades up here, and it failed, it never got there. several reasons, which is, one's like that. So first of all, you're going straight into a trend, not a great idea. Second, you're going into a break level, not a great idea. And then obviously your target was all the way up there, which it just couldn't get to before it ended up reversing. So it doesn't mean you can't take the trades. It's just you got to look at it from a perspective of, is it worth it? Where would I TP? And the move would be pretty small, about 1% on a weekly, and then you're straight into risk. And then it got to the break level, which is better, but then rejected, so that break level is now an origin level. Versus this weekly, a little bit different. So we've got an interior trend now coming down like that, and you've hit that level, which was prior resistance, and now we're above it. There's a good chance it acts as support, and that trend would sort of be your first real risk area. So you wouldn't necessarily try to go for that. If you're doing a fib trade, you might just take it if it touches the trend. But over time, it's pretty likely it'll come back up here. It's just it might end up doing this. Cork bottle. Now I've got a nice beer sitting in a glass, which I'm drinking. Right. So we need a notepad. And we need timestamps. So what were the questions? The glass is getting pretty empty too. Might have to run away to the fridge. If we want a really good Fartcoin move, we want this candle down here. I don't know whether it's going to go there today. It'd be decent. Come on. So when you watch live price action long enough, what you notice is stuff like candles as they get close to the end of their time, they'll position in a place that's relevant for what they want to do next. And if they go there too early, quite often towards the end of the time frame, they start to pull back down, and it was just like it was a big trick to try and get you thinking it's going up. And then if they go there more towards the end, quite often it's like, cool, that's what they want to do. So, this candle's hovering around the trends. So it's kind of implying it wants to open on the other side. It's more bullish if it goes above that wick and opens. And what can happen at that point is it can start to bounce between the levels. So instead of returning to the hold and then bouncing, sometimes what they do is they go above the wick and they open the next candle, and then they come down and they test the target of the hold, but don't go to the hold, and then they bounce off the target of the hold and then move to the next one, and if they close over that, then next one, and so on. Or they go there too early and go down. Well, I think probably the thing people should focus on if they just want to take nice trades is um, like setting up a chart with your various different levels, different time frames, weeklies, dailies, 4 hour, that kind of thing. And then beyond that, refining hold levels is gold. Like once you know how to refine a hold level down to a lower time frame, and then you can either just layer your position in on the various different ones, or if you've got the ability to sit there and watch the price moving down, then you can get the entry. Taking too long. So this has got a 3 hour inside the daily or weekly or whatever it is. We've got so you've got your weekly, and when you start digging into this weekly, you've got a daily all the way down here. So that's where these trades can be. They can be big. They don't always, because they might just play out up here, but it can come all the way down to this and then all the way up to the weekly target. Yeah, good idea. Write down questions. Sometimes it's just good to practice on something like replay tool. So dailies are kind of good to work with. So you might look at, say, this candle here, and mark out your wick, 204. No wonder it stopped at 204. Mark out your wick, mark out your body, then just start rolling down. And now when you go inside that, you've got this kind of on the back side here, which would be a place, so say 201. Where was that line? There. So if we just say daily wick, daily body, 4H backside body. It's not a great level because the wick of the candle's been tested through here a few times. So maybe you go a bit lower. Then you've got this one. Wick. Body. So rule being we're moving forward and down. So we don't go back to that one because we're going forward and down. It may get hit, but there's less chance of it getting hit. We've got diamond look. Diamond body. Okay, so we know all our levels, and then we want our target. So just go back to the daily. And our target's going to be here at 205. Then go down to the 4 hour. Okay. So just note, candle closed above target, price went and moved up a level. So that's kind of, it's another thing which we'll do videos on that one day, but it's about, and then as you can see, closes above level, starts, yeah. We'll do videos about that one day, but that's a whole other thing. But if we're just looking for when the price comes back down. I was thinking about making a thing for people who just rotate spot, because people pay for all sorts of things like which give them different levels, and they ladder in and out on different levels. And the stupidest thing is if you just find the candle that is the base of the move, you can just get all those levels with a free fib tool. So it's just, why pay for an indicator if it's free? Okay. This might have taken a while to come back to our target. Let's see. Oh boy. Okay, I might have picked a bad one there, eh? Let's go. Okay, we're coming back. How do you save multiple timeframes on the same chart layout? Save. Save or view, because this little square up here allows you to split the screen, and then you can have different time frames on each one of the split screens. So it's the same chart, the same layout, but you could, as an example, and there's reasons why you'd do this, like if you were trying to scalp the backside of a range and it was too far back in time, instead of scrolling forward and backwards, you would put a time frame on one side of the screen, and you would put the current time on this one, and then you could see both at the same time. But so there'd be reasons for doing that. Sometimes you might just want to have the 4-hour views, like different views set up across the screen, so you can do that as well. But you just do that with that. And then there's different things like over here you've got new drawing sync and layout. So if you turn that off, you could put lines on one time frame and they won't appear on the other one, even though it's the same chart. And then you can actually put a line on a time frame and sync it across all layouts. There's all sorts of things you can do with TradingView depending on how you actually want to trade it, or treat it, use it. Don't know if that answers your question. Right, so we want down in here. So what we're going to do is just going to find our downtrend. It's there. Falls off a cliff. It's there. Okay. Then we want to find the 1 hour. So it's that candle, the 1 hour. Probably don't have a 15-minute yet. What you can do is you can do this. So just take it down to 15-minute from that point. Goes to there. So that was our 15-minute downtrend. Goes to there. Okay, so we have all our levels down here. We have our target and we have a relatively low downtrend. We could take that down a bit further if we wanted to. Maybe we take it down to 3 minutes. Let's see if we've got a 3-minute. There's a 3-minute. There. Okay. Let's see what happens. Got to move the trend, but we'll do that in a minute. Still going. Get rid of that one. Oops. So this has now gone above the other trend, so we'll just get rid of that interior and then we'll just work with this one. See, accuracy of that. Time array trends from 1 hour down to 3 minutes and you get the exact rejection. Spooky, eh? I think the main reason I don't adhere with 100% of Cotton Candy's trading methods is because he's a 100x day trader. He's trading on 1-minute charts, and sure he trades 4-hour levels and daily levels and that kind of thing, but he does it based on 1-minute moves, which isn't really how I would trade. So, and he sort of contradicts himself a lot because if time is fractal, why is it not fractal across all time frames? Why would there? And the only answer to that in any of his videos is basically, trust me, I've done this a long time, and that is the way it is. And it's like, well, if that really is the way it is, why can you see it playing out exactly the same way on time frames that you say don't matter? And there is some truth to the things he says about how, like he said things before, like Bitcoin's not old enough yet to have relevance on the monthly structure. maybe he said that a long time ago. I don't really know, but there is truth to you need a certain amount of time to even have structure. It's like you can't have a trend without two accumulation candles. So therefore you need at least two accumulation candles. You can't have a break level without two candles in the same direction. So you need at least a time frame that shows two candles. If you put Bitcoin on a 20-year chart, it would just be one candle and there would be zero structure. So therefore it's irrelevant. But I think as soon as you've got structure, at least a range, at least a hold, at least a break, uh, then you've got a time frame you can use. And if you have that structure, so if you have a hold, a break, and a range, then you will have a trend as well because you've got at least two candles of the same color on the chart in both directions. You'd have two hold candles, and you'd have two candles of the same color being the range. So as soon as you've got that, you've got structure, and yeah, that's the so there's certain things that I might contradict, but at the same time he contradicts himself. um, it's like the origin level one, which would like if you're refining levels. I understand refining levels moving forward and into greed is probably the best way of putting it because that would apply to longs or shorts. So you're either for a short you're moving forward and up, or for a long you're going forward and down to find your entry. I get that, and the bit I don't get is you can't apply that to origin levels because they are the reversal point. So the greediest reversal point is historic and smaller because when the large time frame gets hit and decides to reverse, the reversal starts on the low time frame. So it would be contradictory to work forward because forward hasn't happened yet and the reversal started backwards. So yeah. But I also think that probably just doesn't really apply in his case because he's not looking at 3-week charts. So really should have waited till we were closer to the entry, on this one. All right, let's get rid of that trend. Let's now this trend. You know what? Should I cheat? I'll cheat. It's not really designed to work on 3-minute charts. Um, Such a cheater. There's our trend. Okay. So what you're looking for is reversal when the trend enters the higher time frame reversal level, and you don't know exactly where it's going to reverse inside here, if anywhere at all. That went fast. Okay, so we hit. We broke the trend on this candle, and that was off the 1618, so we haven't quite entered the area yet. Yep, still going up. Geez, how long did we have to wait for this trade? Dun, 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 dun. Ooh. I think my food might be here. I'll be back in 1 sec. Yeah, or false alarm. Wouldn't it be nice to know exactly when that trade was just going to go there? Surely it'll be soon. That was a liquidity sweep. Here we go. All right. So entered. On the 1. No greedy entry. Comes back up, closes, retests it. And hits the target. So you can go through the effort of refining all these entries, and then that is exactly what can happen. It can just bounce off the 1 and go straight to the target. Now, all of these entries that you have refined, though, they will be their own trades. So they're not necessarily going to be a trade back to this level now, but what they will be is their own trade with their own entry and target because they haven't been touched. So now you could go back and actually find like your 4 hour as an example. So where is that 4 hour? Gonna have so the 4 hours a little risky just because it's had the wick hit a couple of times, so you might not want to take that, but we'll just see what it does. Yeah. Down, up, down. So if we look at that on that 3 minutes, so that's it getting hit here. And then there's your TP and then dump. So that was a bit of a risky one just because it had been hit a couple of times, but it still gave you that move off the body pretty much to the cent, which is why it's just not worth being greedy, because if you thought that was going to go higher and you were being greedy, well, guess what? You're down here and you're waiting. And it looks like it just shot through that 1 hour before coming back up, maybe. So you probably would have got stopped out on the 1 hour, depending on where you had your stop loss. see. Yeah, so the wick's really, really long on that. So this is another way of sort of assessing risk, but the body's down here at 200. The target would be 200.36, but the level can get tested from this wick, and the target would be the next fib level, which is only like that tiny little gap there, like 201 point something, 201.1. So sometimes you just got to be a little bit careful of the ones that have got really, really long wicks. So you see this candle here came in to the 1H wick, but didn't get to the body, and then it bounced back up to the level 2. So that was the actual trade right there. And then because that had played out, this just went straight through. So if this hadn't have actually played out in that moment there in that candle, then it would have hit the body and then gone back up. So these are the kind of ones you've got to watch out for. And at the end of the day, it's still, they usually end up playing out, but it would have if you hadn't have been stopped out. Thank you. So this is a nice looking one here. If you were to look at the type of structure that you want to look for, nice small wick. You want the 1618 ideally to be above the wick, and then you ladder in, and you could refine that level down. See if you can find a is that a 1 hour? So try 15 minutes. So you wouldn't take that or that. But you could take that. So that would be one level. So yeah, it would be either there. And this is the one instance where you might actually go back in time. So you've got that origin level sitting inside there. Don't know whether that's what got hit, but yeah, pretty damn close. Oh, out by a couple of cents. Maybe not even that. I probably would have got that trade just because I would have front run it slightly. So he breaks holding support has been holds themselves. Um, yeah, so breaks are support and resistance. They're just a what they're sort of talking about is the range. Like we go to say this 5 minute chart. So somewhere there's going to be an origin level and it's created this. And it could be a break probably from in here. So if we go back and look in here, I can see it. There it is. It's that. So that's an origin level. That's also an origin level. So somewhere in the future, these levels are going to dictate the upper boundaries of the range. And so that'll be over here. So there we go. That's our upper boundary of the range. And then there'll be some kind of hold level created after this. And it'll be a really small hold level because we're on a 5 minute chart already. But first thing that basically happens is an origin level is going to reverse the price. And then there'll be, I suppose arguably that's a hold level, but we'll have a look at it in a sec. Okay, so that creates a 1 minute hold level, which is this. And then that starts the whole process of ranging in the other direction. And what happens at some point is the price will probably come back up. There you go. And hits your hold level. And that continues to ladder. So you get that one. And I think you may not even get back up to it. So an origin level will start the range. It'll create a hold level. A hold level will ladder the range, and that'll create a trend, and then the trend will effectively. So if we start with our trend up here, that one to there, and that goes to there, and then you see how the trend rejects, creates another hold. By that point, it's too late. The new trend is in play, which is that one. And then that's going to reject, and then it's going to get over it. And you move your trend, and basically that'll run into some kind of hold, which is somewhere. Oh, that's right. There was that one, which was a higher time frame. Is it a 5 minute? 3 minute. Yeah, that one. And that's there, and off it goes. So yeah, origin levels are obviously support resistance. Break levels can be support and resistance. They're just not as important and they don't hang around for a long time. And hold levels can be support and resistance. And how you invalidate them is effectively if a hold level gets passed through to a break level, the hold level is now invalid. If the break level then fails to stop the price from continuing, then the break level is invalid. If the break level manages to stop the price continuing in that direction that it's traveling, then it becomes the origin level. If the origin level fails, then you get a really big breakout because effectively the origin level is the top of the range. That's or the bottom of the range if you're talking about the other direction. If that makes sense. And that's kind of how they all work together. So if a hold fails, it's going to go for a break. If a break fails, it's going to a new range. If a hold succeeds, it's going to ladder the price and create another hold. If and then that hold will have a hold and a break, and you'll just get continuation and downwards laddering. So it's sort of, yeah, there's been a few times in the Discord where the price has just been going down and down and down, and I've sort of said to people, just put a trend line in for one, and you can't even attack a hold or a break if you can't get over a trend. But then also just put alerts on the break levels, right? Because you can't reverse structure unless you actually hard close over a break level, because the hold level will just keep rejecting. So that's this yellow candle is rejecting this candle, and that will just keep rejecting until such a point as you can get over this level. You have to get through that, and this hold level here has already rejected to create this hold level, which has kept the price going down. What that also means is that this hold level on this time frame will probably not be able to do that a second time, but there is an origin level in there as well. So if we play that forward, there'll probably be at some point in the future rejection of what looks like it's the hold level, but it's probably not the hold level. It's probably either going to be the break level or the origin level. So hard close over the origin, hits the break, rejects off the break. Now, if it hard closes the break, it can keep going, but already this is starting to show signs of reversal, and it's now this hold level up here is the one that's got to stop this from going up any further. So rejection from the break, conversion, so that's now converted to an origin level. So that's now the top of the range. So somewhere in here there'd be a origin level, which is this one. So if this is the bottom of the range and that's now decided as the top of the range, then generally speaking, this is going to try and break that. And what ends up happening along the lines is it creates new ones. So these are sort of like boxes forming inside boxes. So you get a range forming inside a bigger range, and if we, yeah, so it breaks through the bottom of the range again. So target hit. So this one was trying to break this one, and this was trying to stop that from happening, but general rule of thumb, when one of these wants to break one of these, it's just going to go for it. And now you've got this hold level down here, and this hold level has to protect this break level. So anything inside there is to try and continue the laddering. So when you hit that hold level, what it's going to try and do is it's going to try and ladder the top of the range again, which is basically all the way up here somewhere. And then all these things that are in between are going to try to stop it from getting there, effectively. But if this break level never gets hit, and if this hold level manages to protect it, then price should start to ladder in the other direction. And if the break level does get hit and closed underneath, then down you go, and then that'll be your next hold level, which is not a very good one. And it would be that is a base of range. So hold it was holding. Okay, break level's been hit. Break level's converted to an origin level. This is now the bottom of the range. If we lose that, we take a big dump. If it can support it, it's going to target back up through these levels. So if you were to say like the price is on a cliff, when it gets under here, it's really on a cliff. Like it could just take a huge fall, or it could recover. So that's how a break level basically is the last. Once it converts to an origin, it's the last point of call for the range, and yeah, if it's make or break. And so what it's running into now is that prior origin level that was up there. So generally, origins are going to target origins, holds are going to target holds, and then basically one side or the other has to fail. So if it closes over the top of this, it can then target the next one. And if it fails to close over the top of this, then it's going to have a go at one of the lower ones again. And so you got this hold level in here. So that hold level was created based on the origin level, and its job is to then try to keep that price laddering. And if that fails, the break fails, the origin fails, the price really fails. So break has been hit, it's converted to an origin again. So you've now sort of got a whole bunch of condensed or compressed support here, which is just even bigger if it fails. Usually that becomes something like that. And it's rejecting off the underside of that. So it hasn't actually lost this tiny little accumulation range here, which has a different break level as well, which is that one. And if it gets back up inside there, it can actually create an origin level even though it did that. As long as none of these candles below here are hard close in blue. Ooh, is that touching? Yeah, that's above the line, so that can't be a problem. That's a problem. Okay, so that's then hard closed the origin level. So now we start with this break level. And the whole thing basically just keeps on going like this. So basically price action is always just trying to do the same thing, but if you lose that and hard close that origin level up there, chances are it's not going to make one that actually recovers it. It's probably going to have to go to another one. So it's going to go to something down here at a minimum. There we go. And so now we get a hold level. So whatever range happens from this point forward, this hold level here is the hold level that is going to try and protect the new break level, which is trying to protect the origin level, and the whole ranging process starts again. And get stuck under a downtrend. Beautiful. So it manages to hold the uptrend. Doesn't have to go to the hold. So that's good. Goes up. Hits the break level. And manages to reaccumulate. And this is where it's quite important. Manages to reaccumulate to the level. So it didn't close below it. Then it manages to get above it. Then all it needs to do is hard close it. And then it's starting to reverse the trend. And it fails to hard close it. Creates a hold level. Stuck under the trend again. Fun times. Oh, it might do it. Probably not. Come on, one more candle. Thank you. Ah, stop it. Okay. So the ladder point now for this range, so that was your one ladder point is there, but you now got this one here. So this is uptrending. So if this starts to go up and goes to a new high, then your next ladder point becomes there. Used it, failing. So it's going to have to come. So you can see it's making hold levels in the opposite direction now. So trend is starting to push back down. Something happened there. So the time frame probably stepped up a notch. So that would have been the start of your reversal, single candle hold. These two candles are probably something bigger. Yeah. So this is then more advanced stuff, but so when you hit that origin level on whatever it was, the 3-minute or the 5-minute, it starts out by creating a level that's lower. And then as the price ranges upwards, it actually escalates in time. So the reason you didn't hit the hold level on that lower time frame is because it had escalated to something on a higher time frame, which then supports the price. So that's when you start rolling up in time frames and looking at it. And it's probably part and parcel why you don't go down in price and backwards in time, because if time has escalated to a higher time frame, you can't really refine backwards because it's not going to go backwards. So now if you were just tracking this as a trade for giggles, you'd now be tracking it on a 15-minute chart instead of a 5-minute or a 3-minute. I'm getting lots of alerts. We're pumping. Something's going on. ETH's bouncing off that level. That's good. What's that up to? Did that? Did I get a TP? That's bizarre. Order didn't activate. Well. General consensus was Sol was a pretty trappy close. It's just did exactly what it did yesterday. It closed under resistance and then pushed up, which but still thinking it might actually get into these higher levels again. So things like the range trend, it might reject off the range trend as a first touch, which would just basically be like in the double top. Some of the bigger time frames it could push higher, but and ones like this, it's just doing basically identical behavior to yesterday, and that's the pretty reasonable, should hopefully be able to push, as long as it does it fast enough, early enough in the day, we should be able to push through to here, 206, hopefully. See, the longer it takes, then things like the daily structure will need to pull back down. So as long as we can have a nice early in the day pump, we should get some longs. I think it's so all that liquidity is kind of built up in there now, so it's, I don't know how high that will go, but we'll see. It's probably going to be something like BTC taking this area here around that 114.8 or up to this. And they left that behind there for a reason. Let's say they wanted to pick up orders down here and maybe sell it into that. So until BTC gets up there, Sol should hopefully push for a bit. So 4-hour break level at 205. 4-hour something at 206. Backside of a range. Look. Yeah, so that's the hourly fib traders now played out. So that was one that actually went below the break level. It even hard closed the break level, but it ended up finding this origin level through here, snuck back up inside, bounced off the origin level and went up and completed the target. So that's if you're taking that trade just here at 200.347, you would have gone all the way down to 197 before it actually went back up again. So one of the signs that this is going to happen is if they bring the candle down into the hold, and if they bring it down very close to the end of the candle's time frame, what you do is you you run a couple of trends in there and just check to see is it closing under any trends, because that's usually the way to break a hold, is to close in a position that allows it to use something else to reject. But it also created a hold inside the hold, which is that. So it's very subtle, but closing just under that wick there allows it to reject off that wick, which means you've effectively got a hold candle and a hold candle, one trying to break the other one. So yeah, that's the kind of thing that can happen. So if you're looking to get entries in it, when you take the greedy entries, if you refine them down and find the lowest part of the candle to enter on, so if we look at also sometimes if you go to refine a candle and you just can't find anything inside of it that's worth taking, it's because it's not going to work. So, but if you just took this one and come back here, and start with 15-minute. So already it's pretty flawed. Like you've got this 15, this has been tested, this here hasn't. So you can try and go to there. You don't really have much on that time frame. And so you could go down to 1 minute. 1 minute actually works okay on Bitcoin. But, so you don't really have even a 1 minute untested hold. So when you look inside that hold candle, it's a 1 hour candle with hardly anything left inside of it that is at all relevant to price. So what you can do is you can look back at this one, because the break level hasn't been hit there either. So you could choose to take that trade at the break level. So either take it at 200 or take it at 198, or you could look back inside that candle and go, well, on the assumption that it breaks the break level, where would my next entry be? And we know that everything fractally inside this candle has been touched down to the bottom of that wick. So you put a line on there, and then you start refining this candle to see if you can actually find an untouched level fractally inside that. So go down, and sure enough, what have you got? You got this level. So you've actually got kind of that. So you can enter on that or that, which is a very clean, untouched level. And come back to your 1 hour trade. Go. And so this is more advanced masterclass stuff, but you're going for the target of this hold, which is where it's hit now, but you've recognized that that hold is almost completely destroyed on the inside. There's just nothing in there. But this one's got some clean levels in it. And so the target of this one will play out, but you enter on this one, which is down here. Yeah. So the idea is to get the greediest entry on the lowest time frame moment inside the highest time frame move, which is that's a great example where you've got ranges inside ranges, and this range here was supporting the price all the way through here, and that was the whole candle. But the whole candle is kind of dead because the range became an origin level, and that's what created the price move. The whole candle there is what stopped the price move. So what you're trying to do is you're trying to find the lowest time frame moment to actually get into the trade with the furthest away or highest time frame target. So when you're going inside this whole candle, there just really wasn't anything. And so it's not that surprising that the price went all the way through it, but it still has a target obligation, which is up here. So where is that? How do we get to that target? Well, we've got to find an entry inside a whole candle. These don't qualify, right? Because they're all just uh, inside that one or behind that one. But this one has not hit the break level, and the candle that it bounced at last time actually didn't go all the way to the bottom of it or the break level. So you start looking inside there to see if you can actually find something. And but you're working off this one as your target. So then instead of a typical, I don't know what percentage is that thing. So instead of taking this and being in drawdown for ages for a 0.63% move, you said, okay, this is toast, but it has a target which hasn't been achieved. This has got life, so we're going to enter somewhere inside this. And you don't have to be a rocket scientist. You could just say, I'm going to enter below this wick, because we know the wick ate everything inside there, but it's whatever I'm going to enter on is probably going to be below it. But you should check it, because what if it's toast as well? What if there was nothing in that candle, and based on that, it was going to get gone through, like this one could go through this one, and it could come down to this one. And that's even more awesome in a way if that happens, because your target's still up here. So if you ended up getting in on this one to go to that target, it's an even bigger trade. So we end up taking this level here back up to there, and you've got a 2% move rather than a 0.6 something. And you can have a tighter stop loss, etc., because you know that level hasn't had a break hit, and it's got stuff inside the candle fractally, so it should bounce, and off it goes. Well, that one we had the other day where I said we're not gonna. There was that one where we had like that. I think it was a daily. Yeah, it was this one. And I think we were looking inside uh, something. No, it was this one down here. And when we drilled down into this, it was structurally really bad. So like this is really bad. The 1 hour whole candle was actually lower down than the daily. Sorry, the 4 hours lower down than the daily. So then it went down deeper. And we said, okay, cool. So we have an area we will reject, which is going to be here. And that was our area of rejection. But if we'd gone inside this and found that this was tested, and then we went and found the next level, etc., you could actually get to the point where every single thing inside a candle has been tested, in which case that candle can't reject. It can't create a short. And that's where it still has a target, but you would look at the one that was behind it or above it. So I don't even think this thing's. Yeah, that one still hasn't even played out. So if you're in that short, you're still in that short. Pretty bad. But risk-wise, that was pretty risky. It probably. Yeah, that created a daily origin level. And this is the other thing you got to watch out for is levels that they flip, they become support. So if we go down inside there, so we already know it's a pretty cruddy candle. But we get this initial rejection off it. It's good. It's fine. If you'd just gone really risk off and taken this as a 1 hour trade and not tried to take it as a daily, then you would have completed your trade in that first touch. Once it's closed, a hard closed a 1 hour inside of 1 hour, there's a really good chance that it's going to try and use it as support rather than um, use it as resistance. So that candle there was kind of like a warning sign. If you'd been in this trade and you were trying to hold for the daily move and you saw that one candle, you're better off just taking the loss because the chances are it's going to reverse and just do that. Hasn't hit the break. Coming back down. Yeah, so hold and break. So this is kind of more like an advanced hold level. Reason it's advanced is that there'll be lots of things inside of this that have already been tested. When you get a straight, just complete engulfment like that, and this is what we've always taught people to trade because they're just easier. You don't need to do a lot of research. You don't need to dig inside the candles. Um, they are basically just one candle completely engulfs the other one. There wasn't any stuffing around. There wasn't several candles inside of, and and hence you can just take a trade on the candle and down it goes. So these are, quite clean engulfments. These are not very clean engulfments, and there will still be trades on them, like what's happening right now. But you've really got to dig inside there and see what levels have and haven't been tested. How do I choose what time frame matters? Start with the biggest one that's got something available. So if you just had a blank chart, nothing on it, weekly. So right now we should really be looking at what is available inside this weekly. And I see going from Monday. Yeah, so the bigger time frames are more about confluence rather than trading. Like what you're looking for is you're looking for levels that appear across multiple things. So um, the for example, on Bitcoin, the level 124539.4. So if we look at this, let's look at 14 day. So there you go. 14-day untested origin level. Get that. So that's going to reject. It also exists on the 19-day. It also exists as an untested one on the 1 day. And the 1 week. So, and the 21-day. So this is basically telling us that this is really important. Structurally across a ton of different timeframes, there's 14 different timeframes that this exists on. And it's basically telling us that something's going to happen. Now, it could be that it also can mean that something's going to happen multiple times as well, because you might get a daily close over this level, but it doesn't really matter because it's also a weekly level. It's also a 21-day level. It's a really big level. So just because you get a daily close over it doesn't mean you've actually broken it on a weekly basis. You might just get a daily move off it, and then it might roll over and come back down because it's, by the end of the week it hasn't closed a weekly over it. So it's a key level on the chart. It's kind of the next major obstacle. Price either gets over the top of this thing and heads off to some amazing new all-time high, or it just absolutely turns to custard, and that's whatever the sweep of that is the end. I think we have to stay over it for something like I'll have to find what the highest time frame is on that, but whatever it is, it's at least 21 days over the top of that one. I think. Yeah, I'd have to double check that, but so yeah, you look at all those different time frames because you're looking for confluence of levels and how important they are. So in 14 days' time, you never know, you might get a hold level here and then it might bounce up there. The other thing you're looking for is just stuff like, just looking at the number, like if that hold level is 113995, so closing above that would be support, right? So then is there something on another time frame where that level is also support, but it could be for a different reason. So it might be, on a daily. Let's just see what we see on a daily, right? So, and this is also kind of like what you call polarity. You see it on a daily, it's the backside of an accumulation range. So hard closing back up inside that accumulation range on a daily is actually quite positive. But also it's a higher time frame engulfment. So there's several things that you see how it's respecting it now. So you're kind of looking for confluence across all the different time frames and what they mean. And if we had that particular close happening today, then, for example, if the daily was closing above that level today, and the 21-day was closing above that level today and creating a hold level, then you've now got two things or two reasons why the price should go up. And you've also got an understanding as to why it might be a much bigger move than you thought. Because if you're just watching it on the daily and the daily closes in this area and you think, oh, great, cool, I've got a daily close in that area, I'm going to target my break level. And you go, oh, yeah, cool. But what if it's a 21-day close and an engulfment? Well, then it's going to go up much higher. And so sometimes you get this daily candle, like this daily candle, this big dump, and you think, wow, that was a huge rejection off such a small level. But it's not a huge rejection off a small level. It's a normal rejection of something really big that shared the same level. So you can actually get an understanding of um, not only will this move trigger probably within the day because it's a daily level, but it's going to go much higher because it's a 21-day move starting today. And then there was silence. Silence. Oh, I think my food might have actually arrived this time for real. Nom nom. And a good excuse to top up the beer. Can you briefly explain how you draw hold and break levels on non-engulfing candles? Okay. Yep. So let's find one that played out. This one. So you've got the break, which is just going to be the top of the continuous range, so 2 or more to the downside. Like that was a break previously. And hold is going to be anywhere from the wick upwards, but the target is still based off the body, so it's still that. And then what you want to do is you want to find your level inside, so take one day, and put that on there. Just jump down 4 hours. It's already tested. It's already tested. It's already tested. Very greedy. So try that as an entry. Check if there's anything on the 1 hour. Okay, so that can be a level, that one right there, just because it was tested by that second candle. That second candle is not technically a range until it closes, so that's not a test of a hold. So that's could be that. So those would be some of the areas you'd look to enter. And trends. And then it's just like any other trade, you just got to wait for it to come back. You don't know when it's going to come back. There we go. So we got that entry, which was that 113030, and dump, down it goes. So that's pretty much how you deal with them. You also have to pay a little bit of attention to that candle as well, actually. So did that open? Oh, that's good. Sometimes they do tap the wick and then come to the target, in which case you have to treat that higher entry not as a greedy entry but as a separate trade. Mm. Oh. What's everything doing? So rejecting the hold, coming back down. It's probably going to retest this level because it's hard closed it with this candle. Yep. Yep, so top of yeah, so it's the first of the continuous string. So bottom of that yellow one because it would be a continuous string of yellows, top of that blue one because it would be a continuous string of blue. If you ever see price just like one candle down, one up, one down, one up, one down, one up, it's just consolidation and it's not a range at all. And if you're seeing that kind of thing, it's because it's really compressed, and then you've got to go to a lower time frame if you want to sort of find any tradable structure, or you just got to wait for it to break and stop consolidating. Okay. So this has now hit one of the levels inside of the daily level. So as an individual move, it's back up to here, which is about 3%. And if it travels all the way back up to the daily, it's 15%. So if it's going to reverse from here, it'll probably create some kind of origin level off that. And if not, it'll close underneath it. And then it'll go down again. What's everyone up to? I'm eating pie. M&M's. That sounds good. The weather's not so nice outside today. Must be why Bitcoin's coming down. It's all about the tech. What's that mean? Well, there you go. There's your retest. Fudge. So, that 15-minute move that just played out there, it's basically that hold level on the left there, pushing down to retest the prior hard close break level. And then if it pushes through that, it'll hit the hold level. In the Elmo documentary. Hmm. I don't really know what we're waiting for. We're kind of just waiting for them to either just do a bit of a fake sweep to the upside and then probably dump, or just dump. For Sol, it would be good to get something. It'd be just good to get either above this area and then have some continuation. But it can't do it sustainably today. It would have to be tomorrow, or just go down. Give us an entry down here again. Yeah, 4 year cycle. It'd be interesting to see if this changes. It's just always been the same, and I'm sure everybody has their reason as to why it should change. So, so bottom of the prior range. So if it behaved like it did over here and did a pullback to the bottom of the prior range before it goes up, well, I suppose it's that last part there, but if it did that, it's really only going to 100k. So if it goes to 100k and then bounces, then that's kind of it. I guess we'll see what happens in this next week. It's already up inside there. So really it's just got to find the right level to reject off, and then it should be coming back anyway to 100k. But if it's the last part of the bull run, then you'd sort of expect it to sweep the liquidity, and this will be the one time where this thing just goes all the way up and then comes down. So So this candle here controls what happens up inside this range, which is why you put a fib on that. What you notice is that it bounces off the 1618, but it hasn't actually gone back to the body of this. Masterclass. Hmm. Yep. If you started with a reasonable amount of money and you just did that, you'd be absolutely fine. You'd be doing really well. Yeah, be at least a 5x on your money every cycle, hugely outpacing inflation. That's what you need to do. The problem is it's just, you know, people who are trying to get out of the system, they don't necessarily have, $250,000 or whatever to put in and make it into 1 million, and then what do? Do they go buy a house and they don't have any money anymore, or do they put their million in the next cycle and then make it into 4 or 5? And but yeah, I don't know. There's a lot of implications to things like treasury companies and um, MicroStrategy and all that kind of stuff. I suppose like it gives people the ability to sell, but they're not technically selling the BTC. So it also gets people the ability to leverage or get loans against the shares. Like there's not a lot of lending facilities, legit ones, where you can just lend directly against BTC, um, but you can get loans against shares and stocks and stuff like that. So it could be that maybe things do change. Maybe what they want to do is just hold on to their BTC, but get loans against the shares. So selling BTC, buying IBIT, and holding IBIT and getting loans against IBIT, live off the loans, tax deductible interest, and you never sell the IBIT, so the BTC never gets sold. I don't know, maybe. Yeah, well, technically it wouldn't be like if that's kind of the bigger money play, which is to just get loans against the IBIT shares as an example, then they'll never sell those shares, and therefore that BTC might as well be locked. So yeah, yep, that's also true. Yeah, the retirement funds, etc. But the other side of that whole equation, though, is that none of that is actually how price moves. Price moves based on order book, accepted buys and sells. It's and you can actually then have less liquidity in the order book because that stuff is locked. And people seem to think that that's actually a positive thing. Like less liquidity in the order book is only good if there's huge amounts of buying pressure in the order book. But if there isn't, because it's all done via OTC, then some whale can come along and just liquidate the order book pretty quickly because there isn't so much sitting in it because people aren't buying it that way; they're buying it some other way. So then you're sort of reliant on OTC desks having standing orders and order books over exchanges to replenish something that they may or may not have actually sold to anybody else yet based on OTC sales. There's really no way price can ever be um, you know permanently bullish unless they limit to one method of um, setting the value. Like it has to be everything has to be via the order book, or everything has to be via OTC, and the OTC price has to be public and more or less like the price of an order book. If they did that, then yeah, if the demand was there forever, then the price would just go up forever. And if they don't do that, well, it'll just keep liquidating leverage traders and going up and down. Stupid range trend. Yeah, so I mean that's kind of another thing. Like, where do they magically come up with the money? Like, yes, there's a merchant fee that they charge whoever um, for processing that card, but there's not a lot of credit cards have 4% merchant fees. Visa, Mastercard are, I think below 1 to 2% roughly merchant fees. Things like Amex, etc., could sustain a 4% reward. Okay. Hong Kong's really been boring, aren't they? Should have just put a limit order on that, eh? You can still really tell that the entire crypto market is still just in rotation too, because you get one token's going up, another one's going down. It's not really a sign of overall inflows in any way. Still waiting. Any other tokens anyone wants to look at while we wait? BTC definitely looks pretty sick. Looking at that replay. Yay, it's not now. Okay, what's this doing? Um, I don't know. I think it'll make it a bit easier, particularly as time goes on, because it it's almost like it just adds into the candle the post-market, pre-market stuff, and just makes it like no big gap. So that's helpful. Um, as far as will it become majorly different? Probably not, but it would be it'd be good if it really does go 24/7. And I'm just sort of wondering a little bit whether that's why we're starting to see open interest injections that are coming in at different times now. They don't seem to be in line with the typical market opens and closes like they have been for, oh, I don't know, 4 years. So it's even just like we just got open interest came in, so 30 minutes after daily open today on BTC, and it's kind of like, that's interesting. You don't really see that. Normally, you'd expect it to come in around 1:30, um, unless there's another market now that really has stepped it up, which is potentially like, I don't know, Sydney or Japan or something. But yeah, I think this could be pretty handy. See, that's hard to chart, and even if you put it on the weekly, that's really hard to chart. What levels are what levels, and where they engulfments. Do you enter at the bottom of that, or is the bottom of that meant to be higher up because the top of that is further down? And like that's kind of hard to work out. So if you look at that on the weekly, and then you go and look at how the tokenized assets been smoothed out, um, so that's easy. That's exact levels. Messy, very hard, very easy. Still not really too much happening, just bouncing around. 15-minute hold. Straight into the range trend. Go away. Really? Can you do like 100x DGN leverage on Procter Gamble? Oh, yeah. I was actually wondering if a little bit of that is why the stock market's actually doing quite well. Because you've got all these people with crypto assets that now have access to buy tokenized stocks. If they're buying tokenized stocks and then the platform is backing them with the real stock behind the scenes, then I don't know if it works that way, but if it does, it's actually just another way of money transferring from one system to the other without people kind of realizing it, if it works that way. Yeah, stupid range trends. So souls on the 1 hour might end up closing back under that break level, which isn't totally healthy. It's done. Is this going to be our dump? Bitcoin's going for that lower liquidity. Okay. Mm. So if they really want this thing to go down, they're just going to want to push it back down under that range trend. Otherwise, they're just going to be stuck in here for a little bit. Good night. So everything's looking pretty dumpy. So this is, pretty good example there of how you can go very wrong very quickly trading front side fib levels. You got a range string coming straight through here. Just hit that, gone. Whereas backside levels, like these ones down here, they don't tend to have so much getting in the way of them. And if the price dives below a trend like this, normal obligation is for it to bounce back up above the trend or at least roughly to the trend. And then it opens the next candle and can continue to go down or recover. But but having an order sitting on that candle is way safer than trying to take a trade on that candle. Just quite often just never know when it's going to come here. Yeah, yeah, it's been amazing. Just some of the being able to actually test so many different scenarios as well has opened up whole different things. The concept of uh, the concept of trends having the same sort of um, like this one, just as an example, this trend that's coming through here, it got hit, it got hit, it got hit. They couldn't get to it. Look at the next rejection. It's just picture perfect rejection, and then boom, down it goes. So there's something about trends can almost act the same way as origin levels. They can have smaller or bigger rejections depending on how prices behaved around them. And that's the kind of stuff that we might actually be able to identify different, even more different types of trends that have different types of reactions. And therefore you will know, like, is this trend likely to break, or is it likely to reject the price heavier, or, that sort of stuff is the learnings from going through this process of getting these things developed has been pretty awesome. Not to mention they just make life so much faster. Getting trend dives into holds is quite good as well, just like that example. If you were putting the fib on that candle there, you might just try to TP here, but because it started from above the trend, typically it'll go back to at least the trend, which means you could go for the second level rather than the first level. Or in this case, it's kept on going. And pretty much what's just happened is gone from hold to hold. No, so it's been swept down here. And because this is a 15-minute chart, you can't actually see the prior trend. But, oops. Frozen. Not sure where that prior trend is coming from. Wrong tool. Somewhere. All the way down here somewhere. So these two candles were a sweep of this trend. This sort of was a sweep, but it's formed a hold level there now, so it's probably actually going to try to continue going down looking at that. If it had closed up just a little bit more and not created the hold level, then it'd be a bit different. So let's see if it might just bounce off this one and then go up, but so this interior trend, this candle here, which kind of breaks that interior trend, doesn't really break that interior trend because it's touching the exterior and you can't move the interior beyond the exterior. So it's like when trend lines don't break, even though the candle goes below it and hard closes. It's stuff like that that I think catches out quite a lot of new people because they go, oh yeah, the trend's broken, and then they might look to move the trend down here, but the trend actually hasn't broken because you can't take an interior past an exterior. So it's when the trend moved to here, it would have then moved to this candle, then this one would have broken it, so it moved to here, and then it's held the price. And now it's kind of, it could be sweeping it, created a hold level, so it has to come back down. It might come up and create a hold level on the top side and then, do that. You don't normally sweep a trend to then just go down again. You normally sweep it to go up. So we'll see. Sweep up. I'll be happy if Sol goes to 206. It'd be enough. I'm glad you get it. So many people would not. Trends are horrible. Like that one. Okay, so if this candle is going to create the basis of a new range, it wants to close over that, the 1618 that doesn't exist yet. So it's like, so this is kind of how ranges can get created. So the original hold level for a range is always left behind, and it's left there as a final test of a range before a range either fails or recovers and goes up. So to actually create the range, what you need to do is you need to close over something like this level, bounce off the top of it, and the continuation. And so ranges can typically go, 3 or 4 levels to the top side, which might then be confluent in about 1, 2, 3, 4. Anything more than about 4 candles would actually then be hitting the backside of that range trend again. So yeah, if this keeps going up, closes over there, it may push up to the next level, and if it closes over there, next level, and so on. It may bounce around between the levels, etc. as well, but it's just, yeah, what you're looking for is a hold level that gets left behind with a candle close that if you fib the body of the candle, the candle closes above the 1618. That tends to indicate they're trying to create a range. BNB, yeah, sure. So we just had more liquidity come in, like decent amounts of open interest. It's funny timing. Suppose it's 90 minutes since Asia Open, I guess. Um, hmm. Kind of missed the weekly trade. Would have been range trend, entry, TP. So that would have been that. It's probably going to try and push it back. Okay. daily. So you can probably get here to here. But because that trend is being pushed so far up, you might be able to get up to there as well. Just got to come back here first. Oops. That would have been a good candle to take. Hold of a range, no wick. That's all pretty crappy down in there. This might be like that. If this does take a nosedive, most of this is eroded, so it's kind of, there's a few like lower time frame origins in here like that. It could be greedier entries, but all the hold levels are pretty much done. That one's above the normal entry. So if this comes back into the 1125 to bounce up, if it doesn't bounce just straight off that and go up, then most of this is toast. So it could come back to something back here. Which is kind of that level there inside this candle, which hasn't been hit. So yeah, so that's BNB. Oh, come on, make up your mind. So back down into the trends again. This is pretty much just how price ends up getting paused in stupid little tight ranges. They can dive the candles and grab the liquidity, but it usually retraces back before the close. And then just they need to close it up if they want to go up. If they're going to dump it, they'll just easiest way to dump the price here is just to open it on the wrong side of the trend so it can reject off it. But it will have turned this into an origin level down here, so and you got a range trend. So even if you think you're going to get a really big dump, it could just stop here again. Really? Yeah, that was a very risky example. I think you'll get out of it. Like there's a 5 day move on the exchange, which should take us below 194. There's so much liquidity to the downside, and they're not running away to the upside very quickly. It's not the kind of price action that indicates they're going to be going up substantially from this moment in time. It's the old V-shaped recovery thing. V-shaped recoveries is about getting people to shift liquidity. That's not what they're doing now. If this was to do something like this, like that, real quickly, then all of these people end up chasing this pump, and their new stop losses are going to be up here. Now, and then the new range of price is higher. But if you just go sideways like this, all this is doing is just getting people to open longs and open shorts. There'll probably be some stupid tweet at some point, and it's gonna make a decision on which side loses first. It could be FOMC announcement or whatever. It's just these people chased and learnt it. Okay. Gotta say the price action is pretty boring. So I think that's the start of the daily level. Or the weekly, sorry. That might be the start of the weekly. Yep. Give myself a coin long. It's quite cool being able to just set those trends that easy. And you take that low versus any of these current ones, and straight away you can actually see that the correct candle is this candle, and that big October dump thingy was the sweep. Then you can see the first touch trend bounce, which has created the origin, and now we're up here. So then you could have your smaller order up here and have your adding position down there on the 4 hour. And have your really greedy 1 hour down there. And then you wait. Can you show how to set the anchors? Yep. I'm just going to put some orders in for just in case we get a Fartcoin dive. Do, do, do. Okay. How does it know not to take it? Because it cycles through the candles one by one by one by one, exactly the same way I would do it, except it does it straight away because it's a computer and it takes me a really long time. And so, therefore, that particular candle is one that was on a trend, not separated from a trend, and therefore it's a sweep candle, not an actual anchor point. So that's the trick to doing trends properly, is the process and how you actually do them. But the process in doing them properly is very time consuming. So that's doing it. Okay, here we go. So if we were to pick, Fartcoin's fine, right? So let's go weekly. So the idea with these things is, for someone who wants to very quickly set up a chart, they should allow you just almost like to flip through your timeframes and give you kind of templates that you can just write over top of, and then you will just have a chart and it will be set up quite quickly. So if we were to chuck them in like this, so you can either go in here and you can go to your settings and just go reset points, and it'll ask you to choose. You just choose which candle you want to be your top accumulation candle. So we'll choose that one. And it says, what do you want to be your bottom distribution candle? So we choose that one. And then from that, it works out what your trend is based on that time frame. So as you can see, we are, from a weekly perspective, we are below our weekly trend, which is why ideally you don't want this candle to keep going down and close down, because you've already broken the trend. But sometimes what you need to do to get back above a trend is, the first thing you need to do is you need to dive down a bit, then close blue, and then the trend shifts to the bottom side and it becomes support. So that's kind of how you'd work out your weekly. It also shows like the drop off in accumulation as the price was going up here and it just wasn't able to get back to that trend before eventually rolling over. And then you've got your weekly range trend coming through here, which has been the major hurdle. The price hasn't really ever even made it back to it. And then you've got your normal weekly downtrend coming through here. So what you could do then is you could say, okay, well, I'm not interested in trading on the weekly, but I want to know where the weekly actually is. Just another thing too is that you don't know whether that is a sweep candle. So what you can also do is run this to there, and it will identify that that was a sweep candle, and then it will actually put the trends in the correct place running across here as well. So, which is actually, that's the accurate trend, because that is a sweep of the weekly before the big dump. Which is why we couldn't get over here. So now what you can do is you could find, you can actually do the same thing here too. So you can take that to something like that, and it will identify the correct trend based on that. So, or yep. And you, instead of having to actually know what you're doing and go through tons of different options, you can just drag it along them and just find out which ones are actually adhering properly. And then you sort of know, yeah, it looks like that is actually the proper weekly trend, because it seems to be the norm as we go through all these. Okay. Then you could take your tools and mark them. So now you know where your 1 week range trend is. See why it's kind of hard to know what's going on at the moment? You're literally in the middle of the range. And of course you can mark out your break levels, you can put in your origin levels that exist in, and then you can set alerts. So if it actually was to then convert, so say that this break level here, you could actually have an alert there so that if that was to convert into an origin level, you know that it's time to take an entry because you now have a weekly origin level on the bottom there to pump off. You can mark out your hold levels, basically put all your different things on, and mark out your normal trend, which is here. It's that one. Week normal trend. You get another range trend. Yep. And then of course you could take it and dial it down to daily. And then go back and adjust your anchor points. So we want the daily low. Then you got to find your high, which I think actually, so that whole thing there is a big sweep. So that's the daily trend coming through there. And that's kind of what we're pushing into now, is all those daily trends basically. So the price is trying to get through these trends, which it can only do by going sideways, which is why everything is so boring and slow. No real reason. Like I say, you just go through and start with the highs and lows and just see if they make sense. But we already know that this was a sweep on the weekly, so of course it's going to be a sweep on the daily. That particular candle up there is going to be not usable really for trends at all. And but if you start back here, it will figure that out because it can see that this one came through both of these and that this is actually meant to be the anchor point here. Then it will start working downwards from here and then work through all of these to establish that that's the top of the current daily trend. And then it's come down from there. And now you see on the daily, like I say, why it's so boring, because look at what we've got to get through. So you could take, so if you marked out any levels, I didn't do the horizontal levels, but if you marked out any of the horizontal levels on the weekly, then you wouldn't worry about the daily horizontal levels that are outside of the realms of the weekly ones. Like, you just don't need to know about those. But you would mark the dailies that are inside the weekly, and then you would go to the 4 hour and you just do the same thing. And then after doing all that, you could just go to whatever time frame you actually want to trade on and just let it do everything automatic. Hurry up, retire on Asta. Kind of waiting for Asta to take this trend and bounce up to that hold, but it's being boring as well. Guess it's a daily, it's got all day. Surprise, surprise. Bounced on the range trend. Sometimes literally what we're doing is just waiting for one side or the other to break. So 4-hour close in 25 minutes. So same as what the 15-minute could have done. If the 4-hour can close above this little dotted line that's just appeared here, then it could bounce off that and travel up. Try to create a new range. Does that mean? So the things you sort of look at here is we have not hit the 4-hour break level to the downside. We have not hit the 4-hour break level to the upside. So we're still kind of just in that area of price. But yeah, if we can close up over here and then bounce, chances are we'll attack that break level, or we'll revisit 204 again. And if they just keep selling it down towards the end of the candle, then there's different means of selling down. Like they can just sort of sell it down a little bit, in which case it just ends up stuck here, hugging the back of a trend, or they can sell it down a lot and go under the range trend and then crash the price. But it's if it loses this trend here that it's on, this one running up here, then it pretty much has to come down to this sort of 194 level, etc., to find the next one. So it's just, do they want to go up here first and then make a new range or sweep some liquidity, or do they want to make it look bullish enough for the next 20 minutes and then bounce off this and go down? And rain. I have to get another beer. If I started mentioning the brand of the beer I was drinking, do you reckon I get sponsorship? Probably not. So the 15 minutes just kind of, yay, let's go above the range tree and create another one, reject. Pause button. So true. Okay. So it's not too bad if it can close above 201.257 on this candle. Might be finally getting somewhere. I haven't taken any timestamps. People are probably going to be a little bit angry. Come on, a little higher. Right. I'm going to go find another refreshing beverage. I'll be back in a moment. Yeah, I guess they're for people to come in and ask questions and answers, and there is definitely plenty of waiting time while you're waiting for trades. Good night, sir. I mean, it's all fractal. We could just be taking these little scalps, but there's just not a lot of point. 0.28% move. See what's going on in the Discord. Wrong side of trend, right side of trend, wrong side of the break level. Oh, they just don't want this to do anything, do they? The spot. ETH just under that 4090, under that 4096 key level. It's just kind of sitting just under it at the moment. Wasn't the bear market just so much more fun? Hopefully we get something after the 4-hour close. BTC's up to. Might not be the hope that we want. It's under there. Ooh. Trump's posting. Don't even know what that means. Something about a Mamdani. Someone's going to introduce a bill that would bar the president, family, and Congress from trading crypto stocks or stocks. Yeah, you don't need to talk about crypto to change the price of crypto. You just talk about soybeans. Right, 7 minutes. If they want to go up, 7 minutes to push this close up, get it above trend, get it above 201.643, and then that should expedite the up. An alien drinking beer. That'd make a good thumbnail. I didn't actually make the thumbnail. It was Apone. I have no idea really how to do all that visual artwork stuff. It's pretty cool though. Come on. Is it too much to ask for like another 60 cents just to get out of here? Soybean farm with chickens. Yeah. Oh, come on. Just a little bit more. Let's crack a Tui and trade some Sui. I don't like Tui. Come on. We're sitting on a 1 minute origin level. If it would just pop, it'd be good. Could do it. Could do it. Yeah, I went down too, but I wouldn't mind up first. All right. Final minute. Just sitting above that 1 minute origin level. Hmm. More boring. What do we get? 60. Break created 205. So move some stuff around on the 60 minute. Oops. Just closed one of them by mistake. Yeah, there is about a 20-second delay on the stream. So we closed the 60-minute back up over the break level. It's actually technically our origin level. So we'll see if that gives us another bounce. Yeah, we are literally stuck in the middle of a complete compressed mess, and that is why it is very boring. That's why there's so many lines. Thing is, it's not always like that. Like, when you're over here and you get some kind of hold level forming and some big move in a candle, then you can get a decent rejection and you can take it down to the range trend, and it's just kind of open space. And then you get into this kind of stupid wedge that basically you can be stuck in these things for hours, hours and hours, days and days. Sometimes all it takes is all you need is a candle like this to um, pull back up above that hold level before close, but stay blue. And then this trend that's running up here can relocate to the bottom side of it, and then the whole sort of range that price moves in can kind of expand a little bit. Um, or it could break the trend, and the next candle could come down and create a wick, and then it could move and once again expand everything a bit. But eventually they have to break because the candles can't just keep compressed inside a tiny little triangle. So eventually they break. So this could come down here, 199.4. Could also bounce off this, 199.6. Yeah, you could try and take a scalp on the 4-hour hold level. It did close above that, whatever that is. Oh, it's back inside. Yeah. So you could take the whole level of the trend. I mean, pretty much what's sort of happening at the moment is you've got stuff like this, which is trying to push the price down, but there's just so much horizontal support in trend support that just really struggling to get there. And then it keeps developing things to push the price back up again. So end result goes sideways. Some of the other tokens aren't like this, which is probably why trading SOL right now is quite boring. Yeah, 50% lines. And bigger picture wise, until this gets really dense with liquidity, they're not really going to be overly interested in going too far. Yeah. So especially look over here, the high time frame liquidity, it's just empty space. Once it forms in close proximity, it's generally taken. So that line there, took it, took it, took it. Now it's just smack in the middle. Who is this Marty that everyone keeps talking about? He's a guy with a ton of followers that says he knows everything or knew everything was coming. The meme is there's a Marty meme, which is like, hey guys, we knew this was coming. So he can basically be like, oh guys, last time you can buy under 300, and then when the price drops to 200, he'll be like, hey guys, we knew this was coming. That's the Marty meme. Yeah, I think Bitcoin's probably just going to fall off a cliff, to be honest. Sol is actually just kind of oddly bullish. It's sitting in the middle of nowhere. It isn't going up or down, but Bitcoin's just bouncing along that lower liquidity. And it's kind of just a case of, does it push up first and take something? But there's just not that much opening up, like not a lot of shorts opening up. So you would sort of expect it to push up and take something and then come down, but it may not. Yeah, one of the guys just posted in the Discord that just people keep offloading spot. So, we're bouncing along here, but behind the scenes people are selling. Do, do, do. Some people it helps, gets rid of the fear or the inhibitions. Other people it doesn't. They fat finger something and short instead of long or whatever. Oh, we just bounced off that 1 minute origin level. We might go up another 10 cents. Best 1 minute candle I've seen all day. Come on. You know, it's pretty boring when you're staring at a 1 minute chart, waiting. Yeah. Yeah, we got our 1 minute origin pump. It was good. And then we suck again. It's not too bad. Like when you look at Sol, Sol's up and Bitcoin's down for the day, so it's definitely out of whack. Showing it's pushing into the break level on the daily Sol BTC strength, so might it might try to push through there. Can you go over which candle to draw the break level on? Yeah, that's way more fun than watching 1 minute charts. Okay. So the break level is the top or bottom of two candles in a range or more. So these two candles here, their accumulation, so the break level is going to be the bottom. These two candles here, distribution, so the break level is going to be the top. So therefore that was a break level, which got broken here, which is why we've rejected it. And this is a break level, which sits above that break level. So that's kind of the next step to this range reversing on the 1 hour is to close over that break level. If it doesn't close over that break level, it's not reversing. And if it wants to continue the downtrend, it's got to break this break level down the bottom here, which is that 1128.854. Now this one, this is different. This is a break level that became an origin level because it was the bottom of the two candle range, so it was a break level. And then this candle, it got hit by these two, but this candle did not come back to it. So therefore that is an origin level. So ooh, we have a 1 minute uptrend. Yay. So then hold levels are the candle that is protecting the break level. So that would be the blue candle here. This is the hold candle. That is what bounced the price here, and that's what stopped this origin level from getting hit, and also stopped this break level from getting hit. It's that one there. Technically, that's not the hold of the origin. The origin is just the origin, but this whole candle is trying to protect this break level. And so on the top side, that one is an origin level because we went up into it. This one here failed to accumulate back to it. It's become the origin level. So if we look at the top and bottom of this range, it's pretty much 115 to 113, 400. And so you'd never want to have a stop loss inside that area because you'd probably find that it's quite easy for it to bounce from one point to the other, just normal practice. That would be a break level, top of the line of candles. Anything from that wick up into that body would be a hold. Because you've got an FVG here, like nothing's come back to the wick would probably react. So down here, break levels there, hold levels there. Hold level is what's created this rejection. And now the price is effectively trying to come back up, and if it can close up above this candle, then it creates a hold level here. And that's sort of what it's trying to do. So it bounced off this hold level. It's still maintaining this 2 candle range. The next step in reversal of trend is for this to create some kind of hold level so that it can then ladder and continue up. So it's what it's trying to do. It's weak. And then that was a break level. And that break level is now broken, which means that is now resistance for when the price gets back up to there. That was an origin level. And that's now what was a break level, became an origin level. It's now broken, so that'll be resistance as well. That one there. That was a break level, became an origin level. It's now been broken, that'll be resistance as well. So looking at this 1 hour chart, there's probably 2 key places you would consider to de-risk if the price started to go up. One of them is in this area because it's just packed full of 2 origin levels and a break level that could all reject price. And then the other one is this one, which is actually the top part of the range on the 1 hour. So, and you could also look at de-risk along into that hold level, just because the point of the hold level is to continue the laddering process to the downside, just as the point of this hold level is to try and continue the laddering process to the upside. And when things get really, really super boring, pretty much what's happening is these levels are all condensing. And let's say this makes a hold level here, and then you've got, I don't know, maybe the price comes up, doesn't hit the break level, moves around for a bit, makes another hold level here, and then you've got this range in this tiny little spot, and then you get another level there and there, and then there and there, and then eventually what has to happen is it has to go. And that's why you suddenly get a big breakout, because it just goes, right, off we go, up or down. But sideways boring. So yeah, they are basically break level that became an origin level, break level created after. Technically, this break level got created when this became an origin level. Same candle did both. Break level, break level, break level. This one never became an origin level, which is why it's not so important as resistance. But it is still resistance because it's a break level that got hard closed by these candles here. Retest dump. Same with that one. That first break level there, it is resistance, but it's not an origin level. And so when you finally remove the origin level, I tend to leave them on. Yeah, the ones that react on the tip of it's a lot of it's to do with how bullish or bearish the market is and how quickly they're trying to move the price or reject the price. So, some real bearish type price action would be so that's not that bearish. I'll find one where they just wanted to dump the hell out of it. And yeah, so this one. See, just it got a little bit up into the air and then it was like down we go again. That was one. Bit of a fake pump to the upside, and then whoomp, everyone that chased it got hit. Whereas that one was a bit more greedy, and you could actually say they're kind of like greedy or not greedy levels really. This level at the wick, anywhere kind of in the wick, is probably going to be a rejection that's just fast, not greedy, also quite often not sustainable. It's a quick dump, but it's not usually going to stay down. And then the bodies of things are kind of like the greediest point where big money orders are going to be sitting. And they tend to create overall bigger reversals, but depends where you get it from. Like in this case, it went quite a way up, so it's probably not even that it bounced off. It's probably something back here, because then you get stuff like this, which is like then that's an origin level through here, and then that created that. So the question of when to take origin levels off the chart is a tough one, because that was from October 20th on a 1 hour chart. It got hard closed to the upside. If that was a normal break level and it had been hard closed and retested, you'd take it off the chart. But the fact that it's an origin level means it was still capable of rejecting the price over here. So you've kind of got to pay pretty good attention to them for quite a while. And some of the big ones that appear on lots of time frames, they really can create, the end of markets or the bounce that begins huge moves. This one here. So sometimes like you can find finer points like that there. 2 candle range, comes an origin, accumulates above it without touching it for quite a long time, which is a sign it's going to be a bigger move, because it's just accumulating sideways above the creation of the origin, and then tap, up we go. So there's a bit of a saying which is older is stronger. So this is older in the range, so it makes for a bigger move. And then that's the topside one there. And so you look at the topside origin here. Again, accumulation, 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 down, hits the bottom, goes up, gets over the top, bounces, up it goes, retests the exact level, and even now, it hasn't managed to get through that level. So yeah, if you'd taken it off the chart over there, you would have not really realized that it's still in play over here. So I sort of categorize them as origin levels, tested. So e.g. they've been touched at least once after they were created, and then broken, and then broken untested. So the price has gone through them, it's hard closed them, but it hasn't returned to them to do a retest. And then fully broken would be an origin level that's basically done its thing from both sides. But yeah, they still unfortunately can behave the same way. They're just a polarized price point, really, that if price is over it, there'll be a lot of volume coming in one direction. If it's under it, there'll be a lot of volume coming in the other direction. I mean, that was a 1 minute, just to put it. I wasn't kidding about we had a 1 minute origin level. It was that candle in there. So that was our origin level. It's probably actually that or something slightly further back, but so just keep bouncing off it. Push, up it went. And of course, what did it hit? Yeah, it went to the one on the top side. And now we're over the one on the top side. And if we lose the one on the top side, then go down another dollar and we just keep staring at a boring screen. If we can hold the one on the top side, then it might try to push towards liquidity, but it's not likely because they kind of want to fill this liquidity gap in here first. You never know. It's about to create another origin level there. So you get a 1 minute candle over that, you get another pump. Hasn't hit the break level. Hasn't hit the break level. It's closed back underneath that origin level. So now it's going to go hit the break levels. Another one in here. So if we lose this, then you get volume back in the other direction. So yeah, everything that's happening on a 4-hour chart or a daily chart is exactly the same stuff that's happening on a 1 minute chart. It's pretty hard to trade a 1 minute chart because the fees are too high and the moves are too small. Why nothing? Yeah, so broken break levels, so if they have been hard closed, are nearly always retested. The probability is very high. It's just a matter of when. The further you are away from them, the worse it's going to be. This is your. So have a look at this. Okay, that was your monthly break level. This was the hard close. It needs to be retested by one of these candles, and in comes October 10th. Retest the break level. It's just a normal thing that just happens. So it just happened that everyone was really bullish and they thought it was going to go to 250k or whatever, and then it happened. So it's actually it's almost the joke about sentiment is if you've got a pending monthly break level like this, it's probably going to happen when everybody is expecting it never will. And that's because they're all longing. So there's plenty of liquidity and it's very efficient to come down here and do it. So, that's just what happened there. And so what's more interesting is if you compare this to the actual total market cap, because Bitcoin's not really just a crypto asset anymore, given that it's in all these ETFs and TradFi and all that kind of stuff. Structurally, it's okay. So check out the difference in the structure here between the total market cap and Bitcoin. So Bitcoin hard closed its break level on this candle right here, whereas the total market cap hard closed it on this one. And then from a total market cap perspective, the retest came on the monthly open after the total market cap had caught up and synchronized with Bitcoin. So it's, we were waiting for BTC to have that dump for, you know, basically 2 months. Whereas if you'd been watching the total market cap, you would have been going, okay, it's going to happen in this candle. So it's these are the things that are a little bit weird about it at the moment. Thank you, ETFs. But obviously the levels would have been much more accurate on BTC itself rather than trying to get a trade on this. Mm. I think it's been a pretty hard bull run, even for a lot of people who have been around for a couple of cycles, because you get people who just chart every single thing off things like the total market cap, but it's different now. Like the levels aren't necessarily as accurate, and then you could take stables out of it, and that'll give you a more accurate representation for risk assets, for levels of support and reversals, and or you could be looking at, like that example, we could be looking at BTC and just be sitting there scratching our heads going, why is this thing not retested the break level? And then, why? Because it's not really all crypto native anymore. Well, Sol's definitely very strong, just sitting there pressing into that break level. Just have to be a little bit conscious of if it touches that trend. Maybe it goes down from there. So on the monthly, if Sol closes up over this monthly range trend that's running through here in 3 days and 20 hours, that could explode. Like that's the kind of thing that can send the price And the weekly trend won't matter then because it'll be bounced off a monthly range trend. It'll just power through the weekly trend, probably until it hits the monthly trend and then pull back, but still, it's potential for an explosive move is there. And if this just keeps rejecting off the downtrend, then that's good for altcoins, but you want to see this closing under here tomorrow, ideally, below that level. And this is kind of why we're in rotation. So if you look at total market cap of all the altcoins is just stuck in this little area here. So there's not really a lot of money coming into them. So if Sol's going up, it means something else is going down. If Hype's going up, it means something else is going down. It's just rotation, rotation. Things like this can be quite bearish if we don't get back up above that 1.56 by the end of the month. So it kind of doesn't, everything sort of works together, and although Sol might end up with some epic monthly close on the strength angle that makes it really strong compared to other tokens. The problem is if the total market cap ends up in a monthly rejection, it just means that Sol will be less crap, but it will still go down because the entire market will go down. So it's kind of that's why the perfect storm, not that many. I just look at Hype and Sui and Sol and a couple of other random ones that people have brought up in previous live streams, which seem to move around, so why not? Fartcoin and what's this thing? ABNT and AI16. I think I did my daily quota just on one scalp on AI16 yesterday. Yeah. So the perfect storm for a token to absolutely take off would be if it flips strength on BTC, on the BTC pair, if the total market cap is in an upwards move because it's found support, and if safety assets are in a downwards move. And if you get those things happening, and it doesn't really matter what the token is, it will just go up. It's just, it doesn't happen terribly often that you get that kind of perfect storm of everything. I think we've seen it once in the last few months, and no one could quite believe when I was saying Sol's going to go up, BTC's going to go down, opposite directions. And sure enough, off it went. See, markets can't really do much when they're kind of just stuck like that. So tomorrow, that if that candle does not change at all, tomorrow the trend moves to the underside of it, in which case it then has a better chance of actually being able to push up. With all of that above it, it's pretty hard to do much. but you can also see at the same time if BTC doesn't creep back up, then it can close underneath the break and underneath the trend, and then it can reject off both of those, and then we take our next step down to 112. And so then you look at a candle like the 2 day and you just go, oh, why is it just sitting there? And well, it's just sitting there because the 1 day is just kind of stuck here. And why is that stuck there? Because the total market cap's kind of just stuck the same. And it's just, and overall, it's probably because there will be a news event. So we have, yeah, Wednesday the 29th, we have FOMC, we have the Fed funds rate, and then on the 30th, we have the Bank of Japan. Yep. So this is why price behaves like this a lot of the time. And then, so what also happens is right now market makers will be de-risking. So, Marty will be tweeting about Binance withdrawals to Wintermute or whatever. And it's not at all because they're manipulating the market. It's because they are de-risking. They will be taking liquidity out of the books because they know that during these times there could be big swings in sentiment and price, and because of that they don't want to get caught offside and have a non-neutral position. So if he's tweeting about money moving around, it's because he's a retard and he doesn't understand it, and it's effectively them just protecting their own back by taking liquidity out. But the reverse effect of that is that if their orders are not in the order books to absorb people's buys and sells, then the spread can become wider. And so it's kind of a self-fulfilling prophecy, because they think it's going to be risky, so they take their liquidity out, and by taking their liquidity out, it becomes more risky. And then of course the whales come in, and the whales go, well, okay, who's still in there? Well, we've got longs on Bitcoin all the way down to 107. Let's take those longs and open a really big position. And it's easier to push the price down there now because the liquidity from the market makers has been thinned out. And so it's, yeah, in a way he's right when he blames them for volatility, but the thing is they have no protection against losing. It's, they've got no obligation to take a loss. So if you were a business and you've got no insurance against losing, would you keep all of your money on the poker table at uncertain times, or would you take it off? And that's what they do, and then you get that more volatility. So this kind of price action right now is just the market makers don't really want to do anything. They don't want to be part of it. It's going to go sideways, and then they'll withdraw their liquidity. The spread will be worse. The whales will come in. The whales will pump it or dump it, and then fly back the other way. And that's what a Darth Maul candle is. It's and then someone will blame an exchange or a market maker. But in actual fact, it's probably just some fat kid in his mum's basement with a few hundred million sitting in his exchange account and the right software to push it around via API. Maybe he's not fat. He probably lives in the basement. They'll never get targeted by market makers. That's just bullshit. That gets spread by people that lose. They'll get targeted by whales. That's a different game altogether. Market makers don't want one-sided positions. They don't want to buy all the liquidity. They don't want to hold all of the asset. They want to stay neutral. The the biggest money earner for a market maker is to sell you a position and then at a slightly different price buy back what they just sold, but always keep their baskets balanced. That's what they want to do. They always want to be delta neutral in what positions they're holding. So now a whale, on the other hand, they'll hunt liquidity, and that's what smart. That's why you study smart money concepts. It gives you an idea of how structure gets created, how people psychologically think levels are safe, and they'll put their stop losses there. And then whales think from the other direction. They think if I want to open a position, I need a time when the order books are thin and the spread is wide, where I can spend as little as possible to get the price into that area where psychologically all the traders' liquidity will be sitting. And heat maps, etc. They're they're actually just estimates of open interest. They're not actually real trading data. Um, so they're just basically like there's X amount of leverage in the market at this dollar value, therefore it's this close to current price when it was opened because they know when it was opened. Therefore, there is X amount of volume of liquidations at this level, but it's all just a guess. Um, they don't even know whether those positions are still open half the time. So uh, as far as what you could get out of an order book, it depends on the token. So you like Sol, you can open up um, positions that are 6 and 7 figures relatively easy during market hours. So we're actually at the moment, it's not so hard to do it at all anytime really, because like I say, there's been more liquidity kind of coming in even at odd times. And Bitcoin obviously huge. You can open massive positions because there's just so much depth in Bitcoin. And but then if you were trying to open something like I market ordered $150,000 order on Jupiter on Jump Token one time by mistake, and geez, you should have seen the candle. It just shot up, and yeah. So you can you can some tokens, yeah, you can open heaps. Other ones, very little. Um, but Sol's good to trade. You know, 7 figure positions quite good. Um, the other problem you'll run into trying to open up large positions is there's regulations around open interest uh, with exchanges. So as much as they like to say exchanges aren't regulated, a lot of exchanges are regulated, and market makers are businesses and they are regulated, particularly the ones that exist in countries like Europe, etc. Or if they want to trade on, if they want to contract to any exchange that is in Europe, then they will be regulated. And so then the exchanges have to make sure that no one party opens up too much or controls too much of the open interest. And so I've had problems before where like, I go to open a position and it just tells me I can't, I'm not allowed. And then I scratch my head and wonder why. And then you jump on the live chat and they're like, oh yeah, if you open it at that size, you'll be more than 5% of the open interest, and you're not allowed to do that. And so yeah, Sol's going up. So yeah, there's kind of various things that get in the way of you actually being able to compound huge money all the time. But you shouldn't have any problem getting to $1 million. Do you really need more than that a year? Come on. I was just about to say something that would probably get this thing shadow banned. I won't say it. How bad you have it. All right, finally hit that break level. remember opening a position that was too big on some base meme coin. Can't even remember the name of it now. But it took like, 10 seconds to open the position and 3 days to get out of it. Brett. Brett was the name of it. Yeah, Brett. I wonder what that does. I wonder what it's doing now. Even if it still exists. Oh, look, it does. It does, it does, it does. I think that was back in my Bybit days. Oh yeah. Yeah. Something like that would have been me. Just woomph, down. Oh crap. 1, 2, 3 days to get out. Didn't make anything because the average is shit. Yep. Should have just held it. I wonder who the lucky person was that had all their orders sitting all the way down there. No. Come on. Oh, that's positive. Might hard close the level. 4 minutes. Even better if it gets above the trend. Even better if it closes over that wick. Might be time. Yeah, Aster's creeping up. AV&T's creeping up. Yeah. See if it makes us wait. Oh, come on. See what Aster's up to. Still slowly bouncing. So aside from the fact this is going extremely slow, it should just be bouncing off this trend and heading to that hold. So new daily trend. Should be heading up here. If it hasn't done it by the end of today, well, it can't really, as long as it hasn't touched. Actually, no. What is that? There must be something else in there. Oh, I see. Right, so there's a 4-hour origin level there as well. Put a label on that. Stop being so lazy. 4-hour break. So you can kind of use structure sometimes to judge how long something might take. Like, do I go watch a movie? Do I sit here and stare at a screen? Um, if you've got something like a 4-hour break level, which is more than likely going to stop the price, at least temporarily until it's closed over, and if you've got to get over that to get to whatever the daily hold is based on the trend being the 1.1193, there's a really good chance you can't do it in this next 3 hours because that candle would just have to go through all that stuff to get there. And so it's stuff like that where you're like, okay, well, how long is this trade actually going to take to play out? Well, we haven't really even hit the whole candle yet. So we've got to deal with the whole candle. We've got to deal with the break level on a 4-hour basis to get through to the daily target. Which, and a lot of the time in markets, this is kind of the boring sideways stuff you get during Hong Kong and often even London. And then what happens is New York comes along, and just when New York comes along, they go and park the price just above these levels and then pop. So you tend to get more violence and volatility during the New York market, and normally London and Hong Kong are just baking the cake and getting more liquidity in and that kind of stuff. You could also break the trade down a little bit and just, if it dips, you could take this level down here, but just take it back up to the 4-hour break or the 4-hour hold and up to now. Yep. You really do not want this to go up, do they? Sideways. Would it kill them just to like open a candle on the top of that trend? Come on. So this 202 level will become a higher time frame rejection level if this candle does not get back to that level, or any subsequent candle. So this one could tap it, next one could tap it, next one could tap it, 10 of them could tap it in a row, it's fine, but if the 11th one doesn't, then that becomes more of a chance of rejecting. But on a brighter note, if it closes above it, it'll probably blast through that level. And it would target and it could target 204. Something around there. Yep. So I'm just going to TP a little bit of Sol in here because it's in profit anyway, and just put it back in if it comes back down into this whole candle. Yeah. 200. Yeah, it's been a bit of a boring one though, hasn't it? Be good to see something actually get out of its little shell. So I've got laddered Fartcoin entries just in all the various levels through here. So if that just does some silly little wick down, then it'll pick up some of those greedy ones. Good night. Good to use partial TPs all the time, really. You just into break or TP partials or fully into break levels. Say you're inside a daily move, what you might do is you know that the price is going to go between entry and exit on the daily. So you go to a 4 hour, and then the 4 hour will range inside the daily, or you might even go to a 1 hour, and the 1 hour will range inside. And so you might open a position that is going to run from A to B, and then when the 1 hour starts to range down, you might add to the position and TP that portion that you've added as a partial TP when it hits the target of the 1 hour. So effectively, you're just making slightly higher risk but slightly higher uh, bets, because you're up in your position size throughout the entire daily move in the bias direction of the daily move. And so, yeah, just partial adds, partial TPs. Catch you later, Maury. Yeah, it's probably just wake up in the morning and find that all the entries have been hit, the TPs have been hit. They say a watch pot never boils or something. Kind of waiting for this to come down into this whole candle and at least create some kind of range trend. Oh, thank you. Okay. We just hit something. Come on. Hmm. Hype looks so strong compared to so many others. One 1.7%. Yep. Correct. Yep. Yep. 2 candles is a range. Anything less than 2 candles is not a range at all on that time frame. But on a lower time frame, that 1 candle is probably more than 1 candle. And of course, if you then get 3, 4, 5, or 10 candles, well, on a higher time frame, 5 candles might be two on a different time frame. So yeah, pure just means two. The reason you would differentiate is because if you're going to hard close a range and it's more than 2 candles, do you think 1 candle on the time frame that you're looking at is necessarily the appropriate candle to hard close a range that is more than two candles? Or are you possibly spending not quite enough time above the range to hard close it? That's why you can get I don't know if there's any examples here, but you can get ranges with lots of candles and then you get a little close above them and then the price just dips back down again. And that's usually a sign that the range existed on some other time frame and it might have got hard closed on the one you were looking at, but not necessarily on what its pure time frame was. Oh, we've gone down. So so what happened there? We got cool. So we got that 4 hour whole candle. Oh, well. It's a very small compounding of money, but it's still a compounding of money. You're welcome. So with this, it's like we're rejecting off the backside of the trend, which means we're probably going to travel to the hold. So when the price is up here, it's like, oh, okay, positions in profit. Let's just close some of that profit and then just re-enter it down here because why not compound a dollar something. And of course, you can take it out up here again if it goes back up here. See if you get over. Then you might or might not get over the trend, but it's hard to say. They don't seem to want to let it go anywhere. What's that other one? Try to scalp this if it comes down into here. Okay. It's a few set up. Let's just get some waiting. More waiting. Key facts. Solana trading volume surges 97%. Bitwise launches ETF. Yes, 97% trading volume increase and everyone buying and selling for the same price. Yeah, kind of. But aside from the fact that I wouldn't normally be sitting here doing it on a live stream, um, this is just what I do anyway. But it's normally it involves setting something up, having a whole bunch of alerts, and going and sitting on a couch and watching Netflix and waiting, lots of waiting, and and then any of the positions that look a little bit tricky to manage, you kill them before you go to sleep because last thing you want is to be stuck in something that is a bit 50-50. But then the really obvious, totally clean daily candle type ones. You've also got to get rid of if you're going to do layered entries or greedy entries, you can't really leave limit orders for them because you can get the non-greedy entry hit, it goes to target, and then the price reverse goes hits the greedy entry, but the target's already been filled. So you can't quite make as much money while you're asleep as while you're awake. That's for sure. But yeah, that's about it. It's basically a full-time job. So the only difference is I'm now sitting here just talking to myself and a bunch of people in a chat. If I left the room, it would probably, something would happen. Gotta go all the way downstairs to the couch and turn on the TV, and then you start scrolling through the different movies on Netflix trying to find a movie, and then you finally find something you want, and then the alert goes off on your phone. Back upstairs. Oh, what's it doing now? It's just stuff like this where it doesn't quite move the trend. Yeah, I mean, you could go out. There's been plenty of times I've been out at a party or at a club or something, and your phone starts buzzing in your pocket, but you either don't feel it or don't hear it. It's sometimes it's better just to kill everything and go out and actually have peace of mind rather than have a whole bunch of stuff pending. Yeah, it looks like it's getting dumpy. So I might be going back to the bottom of the 4-hour range again. We've got a 1-hour range trend. Daily's starting to pull back below the resistance again. Yeah. You could just take small, you can take small scalps on low time frames just for giggles. Nothing that you get liquidated on. And but yeah, it's pretty tight range. So this, So from a 15-minute perspective, it created that break level, converted it to an origin. This is the origin level down here. So now it's trying to come back down here to target it. You could have could have taken a 1% short, I suppose. But really you didn't know that that was going to do that. This candle. Technically this candle created it, so it could have gone up first and then down. So you could have just done a little 15-minute swing trade. Kind of the good news in a way with this is that if this does close with a reasonable wick on the bottom of it, at least it'll shift the trend out. So the range might start to expand a bit. Get it moving. Got another Trump China. He's confident that there will be a deal after Thursday's talks. Ooh, BNB. I don't think the tweets will mean much. I think it's just a pretty typical FOMC week. We're building liquidity top and bottom, and there'll be whatever excuse is on the table will be the one that they use to take both sides. It's just yeah, with the high leverage stuff, you really can only take the greedy entries. If you go for any kind of lazy entry, you generally speaking will just get liquidated eventually. So then because you're taking the greedy entries, like I said before, you've really got to be there because if it goes lazy to target, then it's job done, and then greedy will probably fail. Yup. Yeah, yeah. It's the difference between someone who's consciously taking a trade and someone who's just gambling is having a reason. It's like this structure here on the daily. It's more of a swing trade probably than anything else. It could just come back up to here, and it could do that anytime really. Um, but you've got a couple of greedy ladder points all the way down here, and so where you enter basically over time. If you enter at this greedy level down here and it goes up there, beautiful. But if it doesn't, like if it closes down and creates a hold level on the top side tomorrow, then what you got to do is change your TP and don't necessarily have an expectation of getting back up here again because you might end up with a hold level at the top of the range, which won't matter if you've entered down here because then you'll be able to exit when it hits the hold level. So it's planning the trade is quite important, knowing what you do based on different scenarios. So you've got either a run up to here, job done, and that could happen within the day. If we've got like positive tweeties coming out now, and maybe New York market opens, and it's like yay, we've had all this positive tweeties today, and then they turn up the speed dial and send the price up. Um, or they go, hey, everyone is expecting that, so let's do a dump first and then send the price up. Who knows? But all you know is that here to there might work. Failing that, greedier, greedy, greedy, back inside that whole candle. If the position's done correctly, you should always be able to get out of it a profit. Rearrange your TP based on whatever happens. In worst case scenario, you stop out if it comes down too low. If it breaks the origin level down there, then you probably don't want to be in it anymore. So, educated gambling. You're welcome. We're going to go and grab a little bit more of that lower liquidity again. Yeah, I'd say with how bearish the closes have been recently, there's probably going to be some pretty good short opportunities coming. There we go. Yeah, they've just taken some of that liquidity to the downside, but then still plenty there. The main issue for going up is that people aren't chasing it, they're not shorting. I think that's as a general sign of, yeah, a lot of the market is so bullish that everyone's just buying the dip. If they're just buying the dip, there's no real liquidity to push or create a cascade in the immediate vicinity. So you need people to get bearish. Bitcoin's developed some um, sort of 100x leverage up about 114, 800, which sort of lines up with where a lot of that resistance starts. So they might push up, grab that, reject. May not bother going any higher if it's just not worth it. And there isn't really much between that 1148. Oh, actually, some just came in. So people might be starting to think bearish. Just got some liquidity popping in at 114,300 and 115,400. So yeah, maybe people are going to start to short. But yeah, everyone's too bullish on Sol. Everything that they took all the way up to 202, nothing's really come in to chase the move down. So it's just kind of open space. If Bitcoin goes and grabs that new liquidity, then maybe Sol just goes up anyway. But I think it's probably so tempting now that they're just sitting right there on the lower liquidity, they might as well just go down. Um, and most of the shorter term stuff is pointing to about 194, but the bigger stuff is, big. Who knows? Like, there's literally a reason on the chart to send it to 110. There's a reason on the chart to send it to 286. There's not much outside of that. But yeah, shorter term, um, not much of a reason to go below the 180s, and most things are pointing to about 194. And to the upside, most things are pointing to 204 to 214. Uh, no, not too deep. The bottom of the short term liquidity, so just stuff that entered today, is about 185. So that's fresh, brand new stuff. So it's 186 might pick up something. If you're going to have a limit order set and go to bed, you kind of want it to be cheeky or nothing really. Yeah, the major corrections tend to sort of come about every 70-ish days or so. So it'd be odd for them to do anything really crazy now, but Yeah, I'm a little bit more, yes, market maker greed knows no bounds. Um, it's more whale greed knows no bounds. They're called whales for a reason. They eat everything. Just open the mouth and suck it all in. Um, the Yeah, I mean, you can be more strategic about where you put your levels. Like, just go onto a daily chart and just find all the daily levels. If you just placed an order on every single daily, daily or weekly hold and origin level, um, between here and $150 on Sol, one day you'll wake up and you would have got some pretty good entries. It's just, or it'll happen while you're awake. It's actually why trigger orders are quite good. So you set up trigger orders and they'll only activate if you've actually got capital available. So, and they don't tie up your trading capital if you're using it for something else. Yeah, there's more short starting to come in now on BTC. Yeah, we sort of need we actually need um a bad but not too bad month close if we want the levels to be good, as screwed up as that sounds. Because to make a hold level to create a new range, you actually need a distribution candle, not an accumulation. So you just can't keep doing accumulation candles, because if you just keep doing accumulation candles, you're not creating any support or any potential to create support. So what you want is you actually want the month to close down, but not down enough to create a hold level. And then if you get that, then the next month can close up. And if the next month closes up when the previous one closes down, then you have a support level. So it's just it's a weird thing where if they do it in a certain way, closing down is sometimes good, and if they do it in another way, closing down is really bad. So, so for Sol, okay. So for Sol, you want the monthly close to be above 200.579, but below 208.597. And I think that's why they're stuffing around so much, to be honest. It's just you want it to be in that gap. And so those targets that we've got at 208 and 206, they might just leave them until after FOMC. FOMC, they might wick this down, they might take a whole bunch of liquidity, whatever. But then by the end of the month, you want them to close in the bounds of that candle. Therefore, there'll be no hold level, but there will be a distribution candle. So then the next one, if it closes up, creates accumulation. And if the next one closes higher than the wick, it creates the formation or the capability to create the formation of a new range, which means it would create a range where the base of the range is 249. and then the top of the range would probably be 380 to 440, something like that, and that would be a pretty good sign that you are going to get a longer bull run if it did that. Um, so the bear case, of course, is that we finish with a hold level here. We reject off the hold level. We come down here to break all of these trends, and you're in a bear market because if it closes under these trends, it'll be down here to the double digits. So that's kind of the bear case really, and that's why it's just sitting there on the fence right now. So for BTC, somewhere, there we go. So BTC is basically where it is now. There's another way though BTC could technically break out, which is just to recover the trend. So this could close up, be back above the trend, and then bounce. In which case it would do a retest. Like this could actually close up above here and then do a retest of the prior broken trend, which is nearly 200. So there's some crazy upper targets on BTC if it does specific things at specific times. And otherwise, a bearish case would be it closes the month under this whole level here of 108.2 basically. Closes under there, it'll have a hold level and it'll be a blue candle and it will try to attack that trend down there, and that'll be sub 100k. So it's kind of the one thing about that high time frame rejection level that's at 124. If it times it right, it can push over the 124 rejection at exactly the right time to then have bigger support to continue it rather than actually reject off it. Three months. Freshy. You picked the worst 3 months too, dude. There's a couple other ways actually this could survive. Just thinking about it. If it closed blue, didn't create a hold level, shifted the trend to the bottom, dived the trend, grabbed the liquidity, bounced, that would work as well. Hmm. Oh, yeah. Yeah, so I started out thinking like most other people thought, which is that everything was to do with macro and narrative and you know the tech, the tech, and then I realized it's just not at all. It's all just like markets are just wealth transfer devices. They're just designed to bring people in and then try to transfer the money from one player to another. And there's some pretty smart players. So, and there's no fast way to make money. Just there's luck sometimes, but it just doesn't last forever. And all the stories you hear are all the sensationalized stories. The person who buys the $1, not even a dollar, whatever it was. The person who buys puts $1,000 into Pepe and ends up with 100 million. You hear about that, but you've also got to remember um, it's a zero sum game, right? So for them to have 100 million, who lost 100 million, a whole bunch of people. So it's just, yep. Once you sort of develop a system that works for you, then you just chip away at it. It's very rewarding, and you make a really good living. Yeah, and like if it goes to if it goes sub 100K next month after shifting the trend to the downside, that's even more bullish because that's just a sweep of the relocated trend. And I could so see that happen. It would be the trend would just move from here to here like that, and it would sweep down, grab all this liquidity that's below the trend, and then exit to create a higher range. So possible. And that would be even more bullish in my opinion. Like it would come down, grab it all, the candle would be blue, otherwise the trend didn't move. Next candle closes up above the wick, bounces off the 1618 level, which would be about something. Let's see what it would be. Bounces off the 121.6 level and then progresses up to create a new range high. That would be pretty bullish. Yeah, nothing's real. Funny thing is though, it's not just crypto. It's stocks, it's everything. There's way more, you know, algo traders and bots out there moving price around and taking trades than what there are humans on a daily basis. We are the few that sit behind screens and do this. So it's really just a game of certain conditions. If this condition is met at this particular time, on this time frame, then price do this. And it's obviously a rather complex formula they're using, but yeah, I don't think the top is in personally. I think we will probably go under 100K, but I don't think the top is in. I mean, it's a maturing asset. A lot of cycle traders are looking at, the time between cycles, and we still have time between cycles. There's a couple different ways you can look at it, but we've probably got another 2 weeks just from a time perspective, maybe a little longer. We've never moved into a bear market until the 200-week moving average has basically crossed over the previous all-time high. And because we've been quite sideways for such a long time at the top of this market, that hasn't happened. So, we could it could happen faster if we had a sudden spike up. Obviously, that could move that moving average, but it's it's never really gone there until that's actually happened. So I don't know. It either means a fast move to the upside and then we enter a bear market, or it means we keep going. And the stupid thing is, if it actually goes down, then the 200-week moving average never reaches the previous all-time high, and we've never gone into a bear market until that's happened. So I guess we'll see. Yeah, I think if we do sweep, there will be a bounce. Just algorithmically, there'll be a bounce. You don't hit a 3-month hold candle and not bounce. It's not the kind of thing you can put a 100x leverage trade on, but it's the kind of thing where you can sit there and rest assured that you will get a lower, like worst case, you'll just get a lower high, but you'll be able to exit in profits. So it's yeah, I don't know. It's easy to say the what could happen. Um, we could dump into FOMC and then pump out of it. It's possible. We could go the other way. We could do both, and that's the most likely one is we do both. We actually take um, whatever liquidity we take first is typically the position being built. So if whales want to long, they'll go down first to create the long, and then they go up. If they want a short, they usually take the top first, and then they build the short, and then they go down. So that's about the only thing you can kind of watch for. It'll be if you get some dip and then a fast recovery, it's probably going to have continuation because they've basically bought everything down there at that low and then they just take it up. And if it does the same thing but the opposite way around to the upside, then it's probably going to get continuation to the downside. And from a structure perspective, there's plenty of hold levels. Like we haven't actually even confirmed the monthly range. Like BTC there's things that happen like a retrace to what level? Okay, so there's things that happen like a retrace to 89, and that's normal ranging on a time frame, and we haven't even done that. So you can't really say the monthly range is going to fail if the monthly range hasn't even fully developed yet. So you'd expect this to come to 89 and then create a new high and then come back to maybe here. One of these levels might come back to 104. And then, like, as nuts as it sounds, you just put the simple fib tool on the base candle of the range and just look at the levels that it actually shows you. We know 104 is important, like it's been really important all these last few weeks. As far as we've dived to 104, we've gone back up, we've gone under it, we've found it resistance. It's a key level for the entirety of the monthly range. We know that 112.3 is a key level as well. We know that even on some of the other timeframes right now, we've got stuff pointing to that. And if we close a yellow candle over that, we might just hit that and go up. So like the structure of the monthly range is pretty much made up of these levels. And there's different ones on the weekly and so on and so forth, but we haven't even tested 89. So the monthly range is not over. But could it go there? Absolutely. And then, up from there. Take it back and look at that one. So they're never going to be perfect, but this range goes up, comes back, retests around that 74.2 area, confirming the range. Goes up to an all-time high. So then if we apply the same thing here, check out the levels. Look where we couldn't get past. Look what was support when it closed over it. Look what it bounced off. So that was our first range. And now inside of that range, we're creating this one. Tops up here, 234. Haven't retested or confirmed the range yet. So could we dip? Should we dip? Absolutely, we should dip. Totally normal to come back down. Sorry, I got that in slightly wrong place, didn't I? Totally normal to come back down. We're already kind of above the top. So should happen. And then if we get another month up after this candle closes down, then what was your previous top becomes confirming the bottom of the next range. These silly little candles actually basically give you the structure of every range that gets created or is going to be created. It's pretty spooky when you see it kind of play out over time. I don't know. I don't think so. No. It's still pushing on the break level. So if it loses the break level, closes under the trend, then it's probably going to wick down into here and job done. That'll get into the trade, but not yet. Yep. Shall I get rid of that one? I think it's this one. Yeah, I'm working off that one. And this hasn't reached its entry yet, but it does look like it's maybe building a hold level, which would be resistance for the target. So if this 4-hour candle ends up closing up and yellow, or yellow and flat would probably be more realistic. The next one would probably dive down into here, and then the target would be underneath the hold. So structurally, it's kind of like it's building the structure to create the move and have the resistance at the target. So that might play out somewhere before tomorrow. This could create a range trend off this candle and then target back to the hold. But it has to close inside it blue first. and that's a pretty clean one, but hasn't been able to get to it because of the range trend. So should have just logged the range trend. That's first touch, which is another really high probability trade. First touch of range trends, as long as there's a wick, typically bounce, so it never bounced it down here. It's doing it there. And the target of the first touch is usually a hold level, which could be the backside of that candle, those three. So it could be that one. If not, it's that one. And this is just sitting on the origin level, so if it closes over top of the origin level, it'll probably bounce back up to that break, and if it doesn't, then it'll plummet down to the next hold level, which isn't that far away really. And Sol has bounced off the 15-minute origin level after creating the top of the range. Down it goes. So it's probably going to target. That'd be about the lowest target. Unless it, assuming it gets past that wick and that range trend. If it gets back up into that area though, then it's now, the range is wider now, which is quite cool. So this is sort of what you want to see, expansion, rather than being stuck in a little box. Get excited over 0.38%. Just have to keep a bit of an eye on this, that this doesn't close under these trends. If it does, then it might take a bit of a nosedive. And there's more liquidity coming in now on BTC again around that 114 to 115, 116 area. So not on Sol, so people don't seem to want to short Sol, but yeah, if BTC takes a bit of a swipe at that, then this will pop back up. And London Open in 1 hour and 36 minutes. It doesn't so much change the probability because the probability of a trend break is still 50-50 because the candle either closes up or down. But it makes it possible because if it closes under the trend, it is not possible at all. So the chances of a trend breaking with a big wick, top or bottom, is zero. Without one, it's 50-50. And then there's other factors. So trends tend to get hit at the same time as horizontal structure, which is how you can once again have some really cool party tricks and like time the market as such. You can say, I think it's going to be at this price at this time. And the reason you can make those kind of odd statements is pretty much because there will be some kind of horizontal level that'll coincide with the trend. So quite often it'll go over the trend at the same time as there is a horizontal level to close over, and then both of those will actually create the break. So that's kind of how it works. Effectively, horizontal levels are sort of designed to break diagonal levels and vice versa. So if you want to break a hold, like this hold, you don't target it because of another horizontal level. You actually target it because of the break of a diagonal level. So at the moment, we've got this hold, which is kind of tested by this candle and it's rejecting. But if the next candle closes up, then the trend break is what actually targets the horizontal. So it's diagonal break targets horizontal. And likewise, the horizontal break would target the trend. So what happens sometimes is that a horizontal gets in the way of it, and but its intention would be to go to the trend. If the trend was all the way up here, then what happens is it hits the horizontal, and the horizontal then has its own intention, which is to go back to whatever the lower trend is. So it's kind of why you've got to take trends into account when you're trading levels, because the trend might obstruct the target. And then you get trend dives, which are where it goes through the trend, hits a horizontal level, and they are nearly 100% success rate trades, because if it goes through a trend, hits a level that's meant to attack a trend that's in the opposite direction, well, then you've got a trend which is trying to pull the price back down, but you've also got a horizontal level that wants to go to that other trend. So you end up with the force of two things pushing the price the other way. So that's where you get big wicks like this. They would have come through a whole bunch of trends, and then they would have hit some kind of horizontal level, which is like this candle here. And in doing so, I wonder if we can find the trend. Let's see. So at the time, the trend was attached to this candle up here. So it was like that. Okay. So for it to push down through that trend, and the trend wants to pull it back up, and it hits this whole candle, and this whole candle wants to target whatever the other trend was, which would have been which one? There, to there, to there. Okay. Right, so that was the trend at the time. This whole candle wants to attack this trend. This trend got dived, so it's trying to pull the price back up. This ends up hitting the trend first, and so it couldn't get back up over that. But the chances of this candle getting hit when the price came from the top side of that trend and not recovering at least to that trend was zero. It was going to get there. So now if it had recovered faster, it would have got back up above this trend, and that's a real bullish recovery. Like that's the kind of thing they do if they are going to pump up it to the moon. But in this case, it's not a very bullish recovery. They were happy to stay down here. They were happy to make it look like a recovery, get people longing, and then go take it. Yeah, so that's the structure. And so now we have our trend all the way down here. And so you get this interior trend coming through here. This hold level gets hit. It wants to try and break this trend. The price is just kind of hovering underneath it at the moment. And then you've got this horizontal origin level down here, and origin levels target origin levels or breaks, so they're a little bit different, but it's going to want to push up through all that. And even that's like, I was saying about first touch of range trends. There's a range trend. First touch, bounce. Which is why we know when we hit this one at some point up here, dump. This one here too. That's not had its first touch since creation. Ooh, got a 1 minute origin bounce again on Sol. Yay. Wee. Why it's doing that. Right, so bouncing on the origin level, creating a hold level. See if we can create a range. Let's run into the other origin level. Just got to close over it. If you watch enough live price action, one of the key things you'll notice is just exactly how the candles move and how they close. Like moving up when there's like 9 minutes to go on the candle is quite often just misleading. When it moves up when there's 1 minute to go and just sneaks across the top and closes, and then boom up to the next level, like that's the kind of thing that you can just tell when price has been bullish or bearish, truthfully, um, versus when it's kind of fake and when it's all just about getting up over these levels and being in the right place at the right time. And so all that stuff applies to a daily chart as well as a 100-day chart. Like it's just, does it close the 100-day chart above the right level on that close of that 100-day candle? Yeah, it's all the same stuff. Basically, yeah. Yeah, they just wait. It's capital efficiency. I mean, if you push the price up, a lot of people might realize that the price is up and then want to sell. And so you just want to do it in the absolute last minute so that people don't sell against you. It's kind of like a language in itself, or like giving instructions. Yeah, there's enough whales out there who know how these algos work, and they're also smart enough to know that they don't want to push it up and then have everyone sell down against them for half an hour, and in the end all they've done is sell their asset, bought a whole bunch of asset which has now gone down in price. They don't want to do that. They'll wait for that exactly the right time to push it to exactly the right place, and then all of the little computer systems out there go, ooh, we're above a key level, and then they go, we should buy now, and then they get the assistance of all of those systems coming in behind them to make the price go in the direction they want it to go. But as you can see right now, if you chase the pump, it's too early. So you just got to wait. So the 15-minute obligation for bouncing off this origin level is just to target another origin level, and that was that one right there. So it's done its job. It doesn't have to go over the top of it. It would be very bullish if it did, and then of course it could target another level, but it's also why just taking the conservative exits on the trades versus having hopium that it's going to go higher. Yeah. If you'd done that on 100x leverage, which you could because of how tight the stop losses and exits can be, that's just your whole trade for the day, really. But what you've got to consider really is this. So this leverage has been coming in. This has been here for a while. This is very new. BTC now has a reason to go and take some of that. And although Sol really doesn't, this going up is going to make that look a little bit better because it's got strength. So if you're trying to decide whether it's time to go watch a movie or not, when there's a bunch of blank space on that liquidity heat map above the price, it's probably not going to move. Well, it depends where you put your stop loss and how much conviction you have, really. Like, if you'd done this, I mean, on a 100x trade, you can't really have anything bigger than where's your biggest stop loss? Most will start to deleverage you there anyway, so you can't have a stop loss any bigger than that. That would roughly be a 1-to-1, so $1,000 risk, $1,000 gain. But if you were to be real cheeky and go, well, I know what kind of move this is, it's probably going to bounce straight off the line and go with something like that, then yeah, that would be a much bigger trade. So about a 1-to-5. Pretty low. Origins hit origins. Origins break trends. So it'd be really weird for an origin level to be stopped by a trend. It's not uncommon for the candle to go through the trend, hit the target, and come back, but you've already TP'd by that point. But yeah, they tend to origin levels tend to be the destroyer of trends. What they will get stopped by is a trend on a higher time frame, though. So that's basically a 15-minute origin level could be stopped by a 1-hour trend, and a 1-hour origin level could be stopped by a 4-hour trend, and 4-hour a daily or weekly, or a 3-day, that kind of thing. They also tend to just go straight through break levels as well. Yeah, you probably could. It's a pretty tight stop loss to do 1,000x. You're welcome. Mostly spot. Like if you look at some of what Blue posts in the Discord, you'll see he posts those things where basically the market is at a bottom and the spot selling is happening while the price is moving sideways. So effectively, they're buying everybody's spot at a low price, but they use leverage or the existence of leverage to get the price where they want it to be. Because when you get a whole bunch of leverage in the market and there's a bunch of liquidations and you can cascade the price by selling a little bit, the leverage market and the spot market are linked. So you can sell some spot, get the thing into the right place, cascade the leverage on the futures market, brings the price down, and then all you gotta do is keep it under key levels to get people to capitulate, and they'll sell their spot. So yeah, that typically a really smart one is basically going to open a leverage short position. They're going to push the price down. They'll make money off the short, and then they'll buy the spot at the bottom, and while people capitulate, and then rinse and repeat. It's a very different world because they're also looking at it from an average perspective, not really. It's not like they buy everything at exactly the $1 price or whatever, and then they'll keep buying on the way up, and they'll keep selling on the way up. They'll do whatever they have to do to keep the price getting to wherever the destination is, and it's why certain times are better because there's just less orders in the order book and less to get in the way. And it's sometimes why they markets change and you get a relief or reversal when a market opens, because if you think of it from a whales perspective, they're not going to want to keep selling against a bigger market or buying against a bigger market. So what they might do is just stop. And so when markets say the New York market has been bearish and everything's just been selling off, but then 8 o'clock UTC everything switches off, or most of it switches off, and suddenly they come back and they go, cool, okay, now's the time, which is why you can quite often see a complete reversal around 8 o'clock. So it's different players. Man, this beer's lasted me way too long. Okay. So the 1 hour might be getting back up inside the trend in 12 minutes. And the 4 hour is bouncing off the range trend. And the daily is still under resistance. And BNB is got a small fill. Hasn't gone to target or trend yet. So that's either, unless it goes for one of the greedier levels, it's going to go here or here. I highly doubt it. There's been a couple of times when people have publicly gone out to try and form groups. Like there was a time not so long ago, I can't remember what it was exactly, but there was some very vocal trader online. It wasn't James Wynn, it was someone before that. And there was another guy who was trying to get people with 7-figure plus accounts to group together to basically push the price to liquidate him, and that was stupid, really, because it's illegal to do that kind of thing. Yeah. So the beauty of how price structure works is no one has to talk to anybody. You just know that if you do this, then this will happen. So it's kind of, yeah. And whales are the absolute enemy of market makers, because if anything, they're the ones that are going to push a position upon a market maker, which makes the market maker no longer delta neutral. So yeah, they're the ones they hate, and they're the ones why they would take their and that's why they would take their liquidity out before an FOMC or anything like that. I think Sol might be breaking through the next level. So it might be coming all the way back up here to test the topside origin again, which means it has to break the trend. But so you look at that volume there. So this is a 1 hour pushing all the way back through all the 1 hour trends because of the touch of a 15-minute origin. So if you're trading pretty much on, or if you're scalping or trading on something like a 1 hour, you've really got to watch what's below it and what's above it. And in this case, you've got a 4 hour bouncing a range trend, a 15-minute bouncing an origin, and a 1 hour with a hold, and a 4 hour with a hold. So price probability of going up, if you bought in down here, pretty high. Yeah. Honestly, I don't know who needs that much money. Like, if you're opening a $250,000 short, sorry, quarter of a billion. If you're opening a $250 million short just for giggles while you drive the market down, I just don't know. What do you spend it on? Who needs a boat that big? Okay. So now it's got to get back above that. True. Good response. So I guess one of the key lessons here from the last hour of our lives is that all the levels are here, and all they need is a reason. And once there is a reason, e.g., liquidity enters the market, they'll use the level and then take the liquidity. So the point of something like a liquidation map is not that they will always take the liquidity, because they won't always take the liquidity. It's if it's there and the level is there, then you'll get a trade. If it's not, if the liquidity is not there, the level will probably just sit there. They might just tap along it, bounce along it for hours on end and pull the crap out of you, and then eventually the liquidity enters and it goes up. Yeah, yeah, I think you are probably 100% right. The irony about having enough money to do the majority of things that are available to you to do is that you don't really find a lot of enjoyment in them anymore because it's too easy. A lot of people, like, their fondest memories are things that they did when they were kids, when they actually achieved something. It's like if you had to save up for something when you were a kid, you're a lot more grateful, um, versus just being able to go and buy whatever you want whenever you want. First world problems. It's probably why a lot of them become such degenerates as well. They're looking for that next thing that's not achievable or shouldn't be achievable or is potentially highly illegal or whatever. One minute 55. Let's stay above that line. Yeah, I'm the same. I live in a pretty big place, but I don't have a lot of stuff. If I when I wanted to set up a trading station, then yeah, you just go out and you buy a bunch of 4K screens and some big gaming computer, even though you never played a game. And when you felt like your TV was too small, you just go buy a bigger TV. It's I used to take scalps for stuff, so I'd just be like, right, I want a bigger TV, cool. Need to do a scalp for however many thousands it's going to be, and off we go. Go get a TV. So, but even that, you just don't need so much stuff. We've got a pretty cool bed. That's that's for the OnlyFans account. Okay, it's changed 1 hour. New break 202, and we've moved a trend. Okay, so we're back above the key levels. Okay. So that could have been a little better if it had created a hold level. That would have been a little better. It's back up to the top of the range, so yeah, it might keep going. Yeah, that's still going to try to push up to there. So in the next 57 minutes, if this candle gets above the trend, bounces off the top of the trend, targets the break, that would be pretty bullish, assuming it didn't run into one of those higher time frame levels around 204. Oh, okay. Good night, sir. Grr. Fart coin. It's probably just going to go up. Looking at that, it's bouncing off the 1618, so it'll probably come up here and we might not get our entries again. Yep. Sui range trend is kicking butt. You're welcome. Thank you. Good night. just got a TP. Oh, that soul that I cycled. B looks good. Soul's good. I wonder why Asta hasn't really. So Asta's bounced a trend and an origin level on, and a hold level. It's just not moving much. Might just be waiting for that. If that candle closes yellow, it's also a trend break. So it might just be waiting to break the trend and then target the break and kind of do everything in one hit rather than bouncing around. Maybe. Bullish. Get back up there. No. 51 minutes. Just noise. Noise, noise, noise. This is looking. This is looking like it wants to do a squeeze, but people are chasing it, so See, might get the 204 and the 206s. Maybe. It's a pity it's now. Like it would be way better to be doing this in 49 minutes. Be up here in 49 minutes. Okay. Just gonna take partials through here. See if it pushes up into there. So 1 minute to see if it closes over the breaks and the origins up here. Doesn't really fit in very well with the 4-hour timing for that to do that now, but it could. Oh, in between. Come on, bounce. If it's going to do a short squeeze, it kind of has to do it pretty soon because the longer or the closer these candles get to closing, the more likely they are to pull back down underneath the various resistances. So it's going to squeeze, hurry up. Good morning. It's like 8 p.m. at night here. People are chasing this pump too. So it's pushing up through resistance. It's possibly going to do a short squeeze up into those targets. Longs are chasing it, which probably won't end well. You've missed about 6 hours of boredom, and then some liquidity finally entered, so the price started to move. Finally, it's been a very long day. Yeah, it's looking. The 15-minute range finally expanded out a bit, so we came down, created a new bottom, well, created a top, tested the bottom, came back up. So now we did close in between these levels, so it's not quite perfect. Like up here would have allowed for a really big squeeze, but closed under the range trend still. So, but we are above the range high, which is there. So as long as it can get up there, close a candle, squeeze, it'll come up and retest this, visit that 204 area again, maybe push through it, grab some liquidity. But yeah, we're getting, so all of this kind of kicked off because there was new liquidity to grab on BTC. But as you can see, unfortunately, what's happening now is everyone's getting too bullish and they're all longing it, and all this stuff's filling up real fast. So it's hopefully we get another push, but it's probably going to end up coming back. Just looking at that. BNB hit a hold level, so that's just kind of working its way up on the daily. ETH has landed on the top side of an origin level, so it should go up. It's also in a hold level. It should at least hit this trend, if not go higher, but it's a weekly time frame, so it could take a while. Could go down and then up or whatever, but yeah, this will just waiting for this to create a range trend, and then it will probably bounce from the range trend up to some kind of hold. Could go all the way up here actually, because there's not really a lot to get in the way of that. I think this is trying to build resistance for the future. So this, I imagine this will close like this, and then it will come down and then come back up. But it might not get back up above that, but it should get back up to that. So there's a scalpable level in here, just waiting for it to come in to play. Not doing anything with XRP, it's just there. This just won't give us our really good entries, but maybe it'll come later. That's still looking really strong. It hasn't hard closed the break level. It hasn't hard closed the origin level, but it's a pretty tiny reaction to it. So its hype's looking pretty strong. We'll enter it if it comes back down here. If not, just trade something else. Don't really want to take a long on something that's just kind of sitting at an origin level under a trend. Maybe if it gets over it, but so he bounced off first touch of a range trend, which stopped it getting to the scalp level, but it may come back depending on liquidity, etc., and how it closes. But it is building a hold level, so it could just bounce off the hold level and go up. You could try it like it's a bad place to take a long because it's kind of right there in that trend resistance, but you could try and scalp in here if you wanted to. And Esther seems to be on pause. It's got structurally every reason to go up, but it's just on pause. So I think it might just be waiting to close an accumulation candle over the trend, which gives it 3 reasons then to go up. So that's about it, I think. So yeah, Sol looks really bullish, but I think it's just more likely it's gonna do a short squeeze and then come back and give tears to all those people that started chasing it. BTC hasn't quite taken every piece of that leverage that's come in, so that might be the final little pop. But it has pushed it to resistance, so it's stuck here. Welcome to how you pause the price. This could be really good for tomorrow if it stays up there. Another closing up over the break level. The fact that it's touched it is what we talked about in the video today. So we wanted this to at bare minimum touch that break level so it didn't turn it into an origin level. So that's good. Even if it goes down and has to close over it tomorrow or whatever, it's still just a break level. So it could get that thing moving up. And that's good, not perfect. Be better if it closed down, better if it created a hold level, but we'll see. Yeah, lucky you. I sat here and drank beer. 34 minutes to London Open, so that's the other side of it too. Is if you start to get bullish, um, looking price action just prior to a market open, quite often that's trying to induce people to take positions to then wipe out during the market. So it's like if you're in the first 30 minutes before Hong Kong, if the price starts to drop down, then quite often you'll find that it's dropping down to a key level where it's going to bounce. And likewise, we are technically pushing up through a whole bunch of resistance and about to open London market. So it might just be, you might find that we get a little bit more bullishness for the next 30 minutes and then these little fellas down here kick in and decide that it needs to go the other way. So, stupid range trends. Yeah, it's really just a case of how much of that liquidity to the top side do they want to take, and timing, because we're getting so close to end of month. And FOMC, making sure that they don't take all the liquidity prior to the news event. It's kind of, yeah, it would be really bullish if they don't dump this month, or if they do dump, they just bring it back up above those key levels. Whatever they do, as long as they're back up above 108, 208 before the month closes, then it's probably going to go to the moon at some point. whole bunch of stuff on the 15-minute. Getting up above those levels. It's a really good spot to do a liquidity sweep from, like on the wrong side of all the resistances. Sweep all the way up, grab liquidity to the top side, and retrace back down to dump into the longs that are chasing it. Well, the monthly is kind of on the fence, but from a structural creation perspective, you actually kind of want the monthly to finish down, but not too down, because down will mean we move a trend that's currently in the way, and it becomes a support trend. It gives us the ability then to do a sweep and take all that liquidity, and then everyone gets their tiers and sub 100k entries. And then if it closes then the following month up, it creates a support structure. And if it closes up above the current topside trends, it also creates more or less the base of a new range. And then there's a couple measurable levels that you can basically estimate the price will go to. So it's kind of, it's about finishing exactly in the right place at the right time, and then the flow and effects of that. So yeah, same thing with Sol really. It's like a $8 window basically. You just want this month to close between about 200 and 208, and then you want next month to close over 230 something, I think it is. Something like that. We'll talk about it at the end of the month. And if that happens, then you've got everything required to create an expanded monthly range to the upside, and that would be cool. Do it. No Sol rockets. Now is not the time. Ugh, stupid trends. Yeah, by the count of days, that would mean it goes longer. By the count of a few other metrics that you can use to measure bull markets, no, it's just normal. I mean, technically, the entire thing could play out within 2 weeks, and that would be the absolute normal cycle from the way I see them. Because it just has to get into the start of next month, and then it could just be rapid expansion to the upside, blow off top and down again, and bear market. All done and dusted, in a couple of weeks. The other way you can measure is, there's a bit of a weird thing about bear markets, which they so typically what happens is the 200-week moving average has to cross the prior high, and that's usually the point at which you say, yep, we're in a bear market. So we haven't even got there yet because we've just been so flat. and that's it's been such a slow curve that this hasn't really gone up as quickly as what it did in previous cycles. So it's just another thing to watch for bottoms and tops, basically. There's a ton of different things you can look at, which pretty accurately, like if you're just into spot, there's a bunch of things you can look at which pretty much can show you the tops and the bottoms, um, close enough for spot. But yeah, we haven't really met either of them yet, from my opinion. We've got 2 to 3 more weeks to go based on the weekly cycles from halvings, how they work. So 40 weeks to start unloading, and 80 weeks is where you start the beer. So that's we're not quite there yet. We're a couple of weeks away, and yeah, the EMA has to catch up, which it hasn't. And if we get past that, like much further past that, then yeah, maybe. Biggest problem right now is getting through a 15-minute trend. Damn thing's stubborn. Yep. Yeah, absolutely. It would be bang on. Uh, I don't know if you've ever heard people harping on about how they said the whole FTX manipulated the previous um, bull market, blah blah blah. That's because that last 2 weeks of the previous bull market didn't do that. So it's that's the 2 weeks that we've just started now. So if we if we do that now, then we're just doing what everyone said should have happened last time but didn't. Will that happen this time? Maybe not. Um, and the things that are relatively um, in keeping with standard 4 year cycles is when we hit the 40-week mark from the halving, there was noticeable large inflow of BTC from whales onto exchanges to sell, and they started selling. And so the first part of the cycle, uh, first part of the end of the cycle, I should probably say, happened exactly like it always did. We've built the rejection structure at the all-time high to reject, to sweep and dump. So that's done. We've done that. We've got we've got a level based on about 14 different timeframes that is big and capable of sending us into a bear market. Um, the only thing that would stop it happening is if we did something bigger and it would take at least 2 months to really do that. So it's kind of why people say you never know if you never really know whether you're about to start the bear market or about to start the bull market perfectly, because you need time for confirmation. So I heard one guy say something recently like, if you spend more than 2 weeks under a certain level, then that's his call for bear markets. And yeah, fair enough. I think it's everyone's got their own way of looking at it. But yeah, I'm not worried about it this week, or probably even next. After that, maybe. Do you mean if a range trend is created and the candle opens on the top side of it? Is that what you mean? Or bottom side of it immediately? Like, um, no, that's a that had a bounce. Uh, check out these two, because these three even, these are quite different, right? So this one gets created, and there's a decent wick. It gets hit by this candle, and that creates the rejection. And it's a decent rejection. It gets through the hold, and comes down and basically has to find some other means of recovery. Then you take this one. This one's created on quite a steep angle, so the next candle doesn't get to it, but the next one does, and that triggers this rejection, this big downtrend, etc. Then you got this one that gets created. Now, the candle that bounces it is this candle, but it's got a hold level sitting right there at the trend, which didn't quite touch it. So what actually happened here is it created the trend, it went up, it hit this hold level then tries to break the trend, this tries to fight back, this becomes the hold level, it fails, it breaks. So they all kind of act differently, but the key thing is that they act. So if you make one, the first time you touch it, you're going to get some kind of bounce. It's the extent of the bounce is based on the structure. If this candle here had tapped that range trend, it would have gone back to that hold anyway. So it, like, oddly, it's almost like this move played out um, before it actually touched the trend, and then this tries to break the trend. So this one here, right? This went straight through it, swept the liquidity, came back down underneath, dumped. Right, so that's like a liquidity sweep of the trend. And this one here, a bit more of just a straight rejection. So created, didn't quite touch it. None of these touched it because they were trapped by this one. This one touched it, rejection. Right, so that was the first touch there. So you can pretty much just take trades off range trends as long as it's first touch, longs or shorts. This one here will probably get retested, which is the likely target. So we know 204 is a resistance level. We know the reason it just hasn't gone there yet is because of these trends. All it takes is a 15-minute candle close on the top side of this stuff, and then the next thing it's likely to go up and hit is that 204 level there. And so when we hit 204, if we close above these trends and then we spike up to 204, it's got a few reasons to go there. So there is this origin level here. And so that has been broken. Hasn't technically been retested yet. Broken on that candle. This one didn't retest it. There's various fib levels pointing to the top of the range being 204 currently on this time frame. And we've got that range trend to be retested around 204. So could we sweep through this? Definitely, because there's plenty of liquidity up there, so they could do like a short squeeze and maybe fulfill some of those bigger targets. But yeah, if it gets through this, it probably goes there. It's just the confluence, and it could be, this would be the perfect candle to do it on because it's the crossover of all of that, the horizontal and the diagonal. But that'd be if it did a squeeze. Failing that, this candle getting over the top and the next one going up would be a little bit more sustainable. But we'll see. In the meantime, we just can't get over the damn trends. Yeah. Yeah, so you get a lot of range trends get created sometimes during consolidation, and they can cross over um, each other, and basically they can be used to keep the price sideways. So it's stop it from moving, which is pain. So let's have a look. Uh, yeah, so that's probably coming back to this one. Let's watch the screen explode. See how many pop up. There you go. So that's a complete overview of your range trends. So you can kind of see how even this one, which is quite an old one from somewhere way back here, has been the top the whole way through here. And you can see the one that's bouncing now and why the price is kind of stuck in this little area here. So they're literally all over the place. So on there, rejected at the top. Bunch down here that it found support on. Yeah. If you ever get price just kind of stuck like this sideways for a bit, you can probably find a responsible range trend for it. That one that runs from there to there. Yeah. So something I've been working on for a while, which is, I can't say I've figured it out yet, is to try and figure out when do these truly expire. Like, is there a certain amount of touches? Is it to do with um, whether they have failed accumulation or distribution? Like, how do you know? Like, what if ever makes one of these expire? And that seems to be pretty hard to figure out. What is easy to figure out is that first touch rejects or bounces. So trade that. Easy. See, it's like one's from all the way back here on the daily. So that was broken by this candle on the daily. And down here is the first time it's been hit. It was that huge sweep, but the first time that range trend was hit was that October 10th dump, since it was hard closed on the top side, and then the price retraced all the way back up to be above it. That's the no, I don't really know. It's probably more up to the dev. I just provide the IP and do all the testing, and if it's up to me, cheap. If it's up to the people who are doing all the hard work, maybe not. I don't know. I don't think it's going to be that expensive. I mean, at the end of the day, they don't take the trades for you. You still have to know what you're doing. So they're not. I don't think there's such a thing as a magic indicator that's going to just make you money, but there's things that can save you time, which is kind of what these are. And they sure as heck save me a hell of a lot of time. In the future, I suppose I could, yeah, I guess there's an argument that they can make you money. Once this is all done, then it's really just a case of set up 20 tokens, put origin level alerts on the 4 hours and the dailies, and when you get an alert, set up a trade. Job done. Just take 4 hour plus origin level reversals for the rest of your trading career, and you'll be rather well off. Don't think we're getting through that damn trend. Ah, come on. London Open. So we have hard closed these levels, so retesting them makes sense. And it's a case of, does that now bounce? Or do we lose it? So we've also got the hourly close, so the hourly could close above the break and then back above the trend and then give a bounce. It's kind of creating an advanced hold level here as well. So yeah, I miss trades all the time because even having these, I haven't really set the alerts up on much. I've got them set up on just Sol, just purely because of testing them. And there's the ones that are running now, and then there's another set which are the development ones, which every time they make a change, that goes into the development ones, and then you have to set the alerts up, and then so on. But it's oh yeah, I've just got them on Sol, so then I go and I look at some other token like Sui today, and it was just like, oh damn, if it had the alert on Sui, we would have known to take a trade on the range trend. And I only noticed BNB just purely because someone in the group mentioned it today. So, I wasn't paying any attention to that. And if it was set up on this, you'd know when this candle closes, how it closes, and whether you get a trend and so on. Damn. If that doesn't break the trend, I might have to wait a whole nother 4 hours. So for those that have just joined, the reason today is very boring is because pretty much this, the total market cap is just stuck in the middle. So all these ups and downs that we're seeing on tokens, it's just rotation. So money moving from one token to the next token and then back to a different token, and because there's no real money changing in or out on the risk assets, it's just rotation. So hence hype go up whilst Asta struggle because rotation. So we might make a origin level on the daily. Eek. Oh, that could get good. Reject, reject. Why did she get a uh, decent entry down here on Sui? If this creates a rejection level at the top. So if it doesn't touch that today, hits that, comes down, tests this, uses this, bounces up. So that could be a. Oops. Yeah, so if it doesn't pop today, could be a 10%er in there. Got that one there as well, so it's probably you'd probably have to pick either that or the lower one or ladder. Of course, if it pops through there today, then game over. Missed the entry. No reason. No, I've taken some pretty decent trades on Sui. I took a swing trade on it, made about 3% on port the other day. It's just structurally, if I was to look to open a trade on this, you don't know whether to short it because we haven't actually made this into resistance yet. If you were going to short it, you would have shorted the top of that candle. You don't really want to long it because the hold levels are down here, so you're already kind of too high up. You could try and take the range trend on the daily down here, but it hasn't touched that yet. It's just kind of in the middle of nowhere when it comes to a daily trade, and most of the trades I would take are going to be either they're going to be lower than a daily time frame, but they're going to be in the direction of at least the daily time frame. So it's kind of just nowhere. The trade I took on it previously was this one. So basically from this candle here up to here. And now we're just sort of waiting to see if it closes over that level, and if it does, might re-enter it. It may run up to there. Look to TP at the trend. If it doesn't touch the break level though, then you could maybe trade between this and this as a scalp. But you can't really do it with too much size because it's just as likely to come down. So I'd like to enter it if it came down here. And if we wanted to find a quick scalp on it, let's see. Okay. Yeah, so that's why it's in boring times. Stuck there. What a fun place for the candle to be. So that's your 4-hour trend. If it dips back to that, you could long the first touch of that. And there's your 4-hour trend to the top side, which has got an interior, just that. Mm. Yeah, yeah. So if the daily's going up, then you want to find the, say, 4-hour entry inside the daily, or at least something inside the daily, and trade with the direction of the higher time frame, which but even this is still pretty kind of stuck. So um, a couple of the types of trades I would look to take on this would be if it came back to the 4-hour trend and dived to the hold. So that would be a very high probability trade. You could take that at quite high leverage. If it came from the top side of the trend down, it would go back up. So that's good. Um, this is basically a range trend. So you probably get a first touch rejection on that. It's also a normal trend, so even more reason to reject. else could you take? You might be able to take that, unless that was that. 2.6841, 2.6843. Ooh, that could be a rounding error. It may reject off that again just because it didn't quite touch the origin level, but I'd be too paranoid to take that. So normal trends basically move around. It's probably the easiest way to put it. Normal trends is what most people are used to doing. So if you were to put a normal trend on this area here, it's just basically saying, I don't know, start with that candle. Go there, go there. That would just be classed as like a normal trend. Yeah, and then the trend gets steeper, so it goes there to there, and then you don't go to this candle or this one because they're touching the line, but you can take it to that one, so to there. That would just be classed as a normal trend, and you could take that trend bounce there. Okay. This one is probably wrong, right? Just purely because that didn't get to it. But yeah, that's kind of just normal trends. And then range trends are created when you actually have a range. So we've got this yellow candle, two blue, this yellow. That's a range trend. Okay. The price opened on the top side of the range trend, so it ran off to create some new range, which is something to do with over here. And range trends are all over the place. There's tons of them. They also happen whenever you get a candle of the same color close inside a hold level. So this becomes a range trend as well. And the first candle to touch that hold level and close inside of the same color as a range trend, that's the first touch rejection of it. So that's the short you could take. First candle to hit the range trend after it's created. And on the bottom side, that's a range trend. So candle opened on the wrong side of it, rejected off the back, took a dump, wicked down. So there's actually heaps of them through here, just absolute tons. That's not one. That can't be one because it's yellow. That can be. So that's actually technically a range trend, closed into that hold. This is a range trend. Created, first touch rejection, broke, moved off to the upside. That didn't quite enter that, so that's actually kind of looks like it is a range trend, but maybe Sui's just a bit suffering from some rounding errors. Does kind of look like one. Yeah, so range trends pretty much are just all over the place. They never move. So for example, that one, which is there to there, creates this rejection, but when it's overcome, it becomes support. And it's not technically hit there, but if this did get hit from the other side, it'd be able to support the price. And it'd be plenty more. So that's a range trend. Hasn't been hit. Not yet. So you chart ranges. I don't know quite what that means, but what you would do slightly differently with range trends, like that one, is you would take a trade on the first touch of them, which in this case failed pretty dismally. Rejected underneath, got back above, took a bounce. Then we were in that range. You can use them sometimes for anchoring, because if you're anchoring a normal trend and you're trying to figure out where you should start your normal trend, if there is a range trend, well, that's going to be the top of a range, so it's going to be a good place to start a normal trend as far as anchoring goes. You never time array them. The higher the time frame, the more important they clearly are, like finding one on a weekly, like our good old Trump trend. Where is it? Like this one. Welcome to the most brutal range trend on Sol. It's created all-time highs and big dumps continuously. So and they can support price like they are a horizontal level as well, which is where they can be a bit tricky. So if you think you're going to lose a range and you think the price is going to fall, but it runs into where's an example? Find one. That. Okay. So this yellow candle going into here. Maybe it's not that. One 112.252. 112.269. Nah, that tapped that. So it's not that one. Okay, yeah, that. So that can't create a range trend. That's not one. Because that's yellow, that's blue. There might be something on a slightly different time frame. Then you get ones like this. So that range trend there is kind of like this whole candle. But if you were to be waiting to get an entry inside this whole candle, you'd never get it because the range trend actually bounces the price. So they're just, yeah, fun things. Then you've got these ones were quite fun back in the day. So you might think you've broken the hold because you've hit the break level, and then what ends up happening is you reject off the range trend, which is created from the hold level. And you get another one in here. And so then you think you've hard closed the range trend, we're going to go up, but you haven't hard closed the other range trend, you're going to reject. You go down. And then over here, they bounce for support. So those are range trends. They appear to be somewhat random, but they're really not. They're whole candle like for like color, whole candle like for like color, and there'll be occasions where you'll just have you'll have a yellow candle closing into something which just can't create a range trend, but then the next couple of candles later there might be a blue one, and then that does create that range trend. In fact, that's a good example. That's a range trend. Okay, so this yellow candle's been hit by this blue one, can't make it, been hit by that blue one, can't make it, hit by that yellow one, can make it. First touch, dump. Loss of the range trend, dump. First touch, pump. So yeah, they're good things to know about, and they're easy trades. Normally you just take it to the hold level, which in this case was pretty much a 21% move if you took it to the first resistance. Yeah, I don't know if that actually answers your question, but how do I determine what is a range? Well, that is a range trend, so basically like for like color closing inside the hole. Or those sort of blocks of four, that's kind of the other type of range trend where you just get that was a range trend. This is actually this is a great example of how you can get caught out. That's a range trend. This candle loses the range trend, and you think at that moment you're going to get this really big dump, but it loses the range trend and creates another one at the same time. So instead of getting a big dump when you lose the range trend and coming all the way down here, you pump off the new range trend. So that's how they can be somewhat annoying. So that's up there to be retested. So these are also the types of reasons why there's very, very, very good chance you'll see, 270 or something on this at some point, because we've got this untested range trend coming up here, and they're just about always retested. So it's currently sitting at about 275 as of today. And then you got time array trends, which are where you take something that, so you're not looking for a weekly trend as an example, you might be looking for a daily trend. So you don't care whether the first candle is a sweep candle or not, because it's not actually relevant if you're looking for something on a lower time frame. So you find, just the highest point, and you start going through, and then, I say you just try to find whatever the daily trend was in there. So you just start at the wick to wick, same color candles, move it to the first one that breaks it, which is that one there. Check to see whether the body is on it. So the body is on it, so this candle doesn't break it, which means it's going to move to that candle. But I want to find the daily, so I'm just going to go down to the daily from this point, and then I'm going to just apply the same rules. So take that, goes to there. Then you just got to check. So that was the daily break of the trend. So So you can see you can get pretty accurate, like you know which one breaks the actual proper daily trend. And when it breaks the daily trend, you know the target is going to be the hold level and the break level up here. So as soon as that candle closes, you punch that long button and it target this. And then that's your first trend break. Moves to there, to there, to there. Until eventually you end up with that being your daily trend. So somewhere in the future. Let's see what happens when you break your daily trend. So that was this candle, and the break level had already been tested by the same candle that did the break. So pretty much you had something else. If you had that break level there, because everything else had been tested. So when that daily trend finally got broken by this candle, you look at it and you go, well, has this hold level been tested? Yes, it has. Has this hold level been tested? Yes, it has. This hold level's been tested? Yes, it has. This yellow candle had tested that break level. This yellow candle, there's no break level in there because it's a single candle. So that was your target. So that closes, hit long, TP there. TP into that break. If it gets over the break, open it up again and go. Somewhere in the future, this level would have created probably quite a big breakout too. So that must have been, yeah, whoompa. Off it goes. Yeah. Yeah, not human. So do I use classic ranges? Yeah. I guess you kind of have to consider everything. Like, what are we on? We're on the daily. Like this candle down here on the daily is showing all the signs of, yes, it is. So this is showing all the signs of being a range base. So it's been engulfed and broken. The candle closed over the 1618. It's bounced off the top of that. So this has been left behind because they're always going to leave one hold candle behind, and then they'll create a range. And if the range is ever going to fail, it'll always test the bottom hold. And then the bottom hold, its responsibility is basically either to completely recover the range and send it up to an all-time high, or it'll go to about halfway up the range and reject, and it'll find there'll be something it'll reject off, and then it'll fail and it'll go down. So structurally, a normal range is created like what you see here, where it creates a hold, closes up, completely engulfing everything, closes over this key level, bounces off the top of the key level, moves up. And the range will just keep on developing through these levels until something stops it, which could be like that break level as an example, or it could be the backside of that range because that's what stopped the price going back up through there. So, and these are those same levels that we're looking at when we're day trading. We're going, well, we were going to TP, and we know we've got weekly levels that are like 204. We know we've got daily levels that are like 206. So these are areas where you want to de-risk because we're creating a range, but what we haven't done is create the top of this range yet. This is not the top of the range because ranges don't do that. Ranges do that, you know. So yeah. See, I use normal sort of range theory as well and make judgments on where I might want to take profits if I'm in a trade, or whether I should even bother for it to come back to the hold level because something like this. Also, it gives a risk factor to that hold level. That hold level will bounce. There is like if there's such a thing as a low risk trade and a portfolio building trade, it would be the hold at the bottom of an entire range. You might have to wait a long time for it to come there, and it will only come there if the range is failing. But it'll be a very surefire trade. So, and you can replicate that on lower time frames if you're looking for scalping. So let's try to find one. That's one. Don't know if it's ever come back there, but oh, there you go. Bounce. So some of the guys that we're talking about who are building bots, what they're doing is whether they know they're doing it or not. The way I sort of explained it to them is that this is a low risk hold, and the reason it is because it was left behind, another one was created, and the range continued. So therefore, have your bot load trades on these. What they are is that they are the final hold of a range, and they pretty much always react. So it's just that you had to wait very patiently for 1 day and 2 hours to get that trade. So that's there's only 10 people currently on the stream who saw that. You're the lucky 10. So if this moves to a higher price after this, then this becomes one down here. So we can find a 5-minute range. Yeah, it's all just bigger range. That's one. So this is like the 5-minute range that was developed before the 15-minute range came into existence. That's the 5-minute there. And so this is the other thing about ranges is they evolve in time. So before we had that 15-minute range, what we had is this 5-minute range. But fractally, it's all the same thing. So the bottom hold gets hit, it manages to move to a higher high, and then suddenly we have development of a 15. What are we doing? Yeah. And then suddenly we have development of a 15-minute range, which came after our 5-minute range. And so somewhere back before this, if we zoom in, there'll be a 1-minute range, or 3-minute or something. But as far as your entry, tap, go. Job done. Nearly failed that one, but managed to recover off the break level. created a origin level. It's not being visited. So this is kind of how time evolves, or price evolves. So you got that 5-minute origin level in there. You got the base of the range, becomes a 15-minute level, and you go up to 15 minutes, and then the 15-minute ladders off the base of the 15-minute range, and then there'll be something in here, so it'll be like an hourly or something. And then the hourly gets created in here, and we've just bounced off the hourly. So from 5-minute to 15-minute to hourly, that's how time evolves. So when you're looking for the best entry, you find the entries that have already, or the ranges that have already played out, and you work up in time to find the next one. So if you'd bothered to do all that, you would have found that your 5-minute had evolved to 15, had evolved to hourly, and then we were waiting for a test on the hourly, and now we've had a test on the hourly. So you'd sit there and you'd wait for this as your entry down here, and then you'd be up here. Which means you get to make a 4-hour. But the 4-hour hasn't actually created a range yet because you don't have a down and then more up. So 4-hour is looking to create a range. Is it capable of creating a range? Well, it is if it closes over this. Okay, and then it can bounce off that to create a range on the 4-hour. There's currently 14 people on the thing, so 14 people just saw how that works. Just put something in the chat if you think that's kind of cool, how time actually evolves on a chart and creates ranges, which leads to the next level of time creating a range, and that's so on. So the longer something has been around for, like in say an uptrend, so if you take BTC, which has been an uptrend for a long time, since we're down around 13k, you think about the time levels that's passed through, and therefore what time frames of ranges you would actually look at. Yeah, yeah. There's stuff that I've figured out over time that just is so different. You should chart high to low, like that's definitely important. But when price is moving in a direction, it's actually evolving through time. It's not like a weekly doesn't exist unless a daily has gone up for enough time, and that's the kind of things that I always found and sort of struggled with when I was looking at those videos. Is some of it makes sense, some of it doesn't. Like, why would a reversal start? Um, like, if you were going to reject off a weekly level, why would the rejection begin on a weekly candle? Like, it would evolve to become a weekly candle from something lower. I don't really even know how to explain it properly. In my mind, I just sort of think, like, if you're driving a car in one direction at 100 kilometers an hour, you can't just hit reverse at 100 kilometers an hour. It doesn't work like that. You have to slow the car down and then speed it up from 0 to 100 in the other direction. That's the way I sort of mentally think about it. You just can't. Yeah. So there's different things between what I do and what he did. Nice. Thank you. Meanwhile, back to looking at 15-minute charts. Can we just get through that trend? Please, this time. So watching this kind of stuff's actually pretty pointless, really, because we know what's going on. We know we're actually in an hourly trying to create a 4 hour. So this is more relevant to what's actually happening. I just don't see us, I just don't see it's worth shorting anything just yet. Everything is moving up, like time wise. You could scalp shorts, but from a bigger perspective, it's, if anything, it looks like we're going to do a short squeeze. Uh, maybe 208 would sort of be my thoughts, but that's more based on the theory that I don't think they're going to want to close the month over 208. So there's a few days to go before the end of the month. I mean, the next level that could reject is going to be right here, and intention wise, we're, what have we got, 20 minutes to go. So if they sneak back up over this level near close, then they're back above the trend, and then they could bounce off this and just keep on laddering up. The origin level is up here at 204 to sort of 205 area. There's a bit of resistance through there. You got this whole candle, which is probably going to give some kind of rejection, but anything up inside here. But it's a really small candle. It's got a really long wick. It's not a great whole candle. Really, it's about time. So if they want to just bash through all this, it's about when do they take the candle up. So with 20 minutes, it means get up here in 19 minutes time, open the next candle, and then hit that, and then go up, and then take on this stuff. Yeah, it's too small a short to really even worry about. This could reject back down once it hits the break level. Nice. Yeah, I need to go to the bathroom. I ran out of beer. I don't know. I'm just going to TP some at 204, and then I've got a little bit at 205, a little bit at 206. That's it. If it goes higher, so be it. There'll be another trade tomorrow. I haven't actually looked at these other ones. See how they're going. So BNB's going good. Sol's going good. Asta's starting to move finally. Um, yeah, AV&T is, that's a long shot. That one, it's the refined level on AV&T is like 50 cents. and the top level is like 68 cents, so it's a huge difference, but very small position. So, uh, so yes, going good. Didn't take that. Probably should have, but didn't. Going good. It's created the trend, starting to bounce. So that probably will TP. Didn't get my entry, don't think. Did we get that? Nope. Oh, already TP. Yay. Okay, got that. So this is looking to try and create a range. It's bounced off this, it's head to this. So that's already done. Didn't do anything with that. Didn't get an entry on that. Probably just should have. It's probably still could. It's probably going to come here. Don't like it. I want my greedy entry, but you can see what this is doing. It's trying to create a proper range, and this will be the base hold for the range. So, yeah. This is where you have to sort of apportion your sizing. Like, if you got an 8% move, that's pretty high probability that it'll come up here, because on the theory that it's trying to create a range. But you can only really open it with a small size, because you'd have to be able to bring your average down into this range of this area if it was to come down. So small size to run that, bigger if it comes down into here to bounce it back out profitably. So I don't know. Group vote. Do it, don't do it. Daily trade. So much can change in a day. See? People opening shorts on BTC. What's it going to do? So even if that 4 hour wants to try and create a range, it would come back to 201.6 as a bounce level to create a range, which is exactly where all those 100x traders think they're safe. So yep. Pity this candle's got so much time on it. So it's pushed into the hold. Could create a range trend. Could go up, hit the break, retest the prior broken trend. Could create a hold. Could create a whole range. 3 hours to tell. Have you seen Zeus? His chart. Has it actually finally popped? Okay, no. Still 6 cents. Yep. Accumulate. Quality assets, as Marty would say. Oh boy. His portfolio must look so bad when it comes to the junk that he's bought. What is a sweep candle and how do you detect them? Okay, so sweep candles are basically ones that swept the actual trend that was from the past, and you can end up attaching trends to the wrong candle, because a sweep candle might be something that was just sweeping the liquidity before a large reversal. So if you were to look at, say, Aster on the daily, okay, the big question is the high where the trend actually starts, or does the trend maybe start back here? Which might sound a bit weird, but like, I'll show you what I mean. If we were to look at that as our top resistance trend, and let's say we look at that as our bottom support, then it means our trend is kind of running through here, which is possible, but it doesn't really explain why we got this sort of just up, 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 kind of hard rejections going on there. If we go back and we look from here, what it does first is it looks at this candle as a downtrend, and this blue candle was the sweep. then this one broke the trend, and then this was the sweep. So the actual trend runs through here, and that gives you your rejection, 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 down you go. And so then your first interior trend is this one running through here. And we broke that because it was, we were there, then we became there. And this was the first candle to basically break over the trend on Aster. So on the daily, over that trend. So we're sort of expecting this to come down to a retest, go up, which is sort of what it's doing now. And you'd expect it sort of to come up into this whole candle up here on the daily. It's just pretty weak because it's kind of like I say, rotation more so than lots of new money flowing in. But the easiest way to detect them is first to always be skeptical of the highest candle because the way markets work is they tend to sweep the topside liquidity and then go down. So the highest candle is more often than not the actual start of the trend. Come back a few candles, try to find like a downtrend like that, which got broken and led the price to move up. So then that is probably more a realistic trend. Then take the anchor and move it to the next candle that broke trend, and then see, did the next candle actually break that trend? And in this case, it didn't. So instead of using that, which was the sweep candle, you use that. And then that becomes your first candle to candle, and that's your sweep. And then, yeah, the rest is history. So that's sort of how you identify sweeps. The other thing you can do is just totally forget about single time frame trends. And use the sweep candle of the higher time frame, but this is only if you're going to trade on a lower time frame than say 1 day. So if I wanted to trade on a lower time frame, I could take this, take it to there, go to the first break, go to there, and then I could switch down. And regardless of what was back here and whether it was a sweep, this would then allow me to identify the 4-hour top, which is that one. And then you could work your various trends from here. So then you get that. That's your 4-hour trend. And all the way down here, when we broke our 4-hour trend, we had already tested the hold. So this yellow candle had tested the hold. We did our trend break, and then we waddled our way up to the break level, and that's a trade. So that's how you trade trend breaks on, yeah, time arrayed trends. Yeah. 18 people saw that. Imagine if 1,000 people saw that. That would be pretty cool. Be 1,000 people taking trend break trades using time arrayed methods. Come on. Nah, it's real slow. I mean, it's good that it's got up above these trends now, which if it can hard close above here, then it'll hit the 204 target. Time. You're welcome. See, 1 minute 20 to go, sitting just above the break level. So the only negative thing about this close is that the wick on the top of the candle is too long. So it's going to move the trends, and it should hit the break. It hasn't hit the body of the hold, but it's going to try. It's hit the wick of the hold. So when this breaks the trend, which is that red one, it'll move up. It's going to be under trend resistance, which just might slow it down even more. But there we go. A whole bunch of alerts. So above the break level, back up above the trend. Should try to hit that. That's still problematic. Yo, really didn't have much else to do today. Got it. So it's broken the interior trend. It hasn't actually technically broken the exterior. It's pretty good chance that if it sweeps the liquidity, it just ends up going back down. Come on. Give me my TP. Mm, range trend. Get out of the way. Yeah, so 204 is basically the make or break level for most of the high time frame ranges. So it's pretty likely we'll reject off it, but it's also possible that it just wicks through it and grabs, topside liquidity and then comes down. So it's pretty hard to say exactly how it'll behave. I mean, we went up to 206, I think, or whatever it was yesterday, 205, 206, and then pulled back. If we base it just purely on the daily, so the daily has recaptured the old prior broken trend, and so it's using that to try and push through the horizontal levels. The resistance is still here. What stopped us last time, we're still coming at it from the wrong side of that trend, and we're still ultimately on the wrong side of the interior trend. So it's just a case of how far does it push up, how much liquidity do they take. It's not a very sustainable place to start moving price from. You kind of have to hold it here for another 14 hours, which I'll be sleeping. But yeah, so I would still say the smartest thing to do is de-risk a little bit if you're in a nice profitable long, if it starts to hit these levels. And of course, the closer we get to the close of this, the more likely this is to start pulling down, like this candle, which, as you all saw today, started to pull down as the day came to a close and then ended up, underneath again. So it's all same stuff, different day. It's kind of how double tops form. So, yep. Now the bullish case is that if it closes up, it creates a hold level, and the more bullish case is that if it closes up above that wick, it could come back and retest this at about 201, create a range, and then actually move up higher. So it's pretty hard to say what's going to happen tomorrow. We don't have crystal balls, but it's it could just be sweeping liquidity, getting more people to chase, and then somewhere in the next 14 hours, down it goes, because nothing is hard closed. It's not guaranteed support in here. Or it stays up, which requires continuous buying pressure, and then all of this stuff gets hard closed. The break gets hard closed. We're over the top side of the trends. Haven't hard closed them, but you hard close the break, so it's pretty unlikely that it's going to dump without coming back. And yeah, because the same stuff happens in reverse, right? Like if you create this level and then you come back down here, just like by the end of the day this pulled back because it was from the wrong side, if you did a dump now but you hard close this level, then it ends up pulling back up to these sort of areas. So it's kind of, yeah, we'll see what happens. But personally, I'm not aiming for up here. It might go there, but not aiming for it. Just going to take some profit in this area here. And that will be all we need today. I'm just going to take BNB when it reaches here. Not going to try for the trend. Probably will. Don't need that. But we'll just wait and see. If it had closed, if this candle here had closed over that 1618 and then come back to the hold, then I'd be more inclined to take it up to the trend, but it kind of came from the underside, so we'll just TP it up here. Call it a day. Thank you, whoever pointed that out. I was not even watching. yeah, yeah, unsubscribe. I don't have a crystal ball. That should TP very soon, so that's good. And that's already done. And what was the vote from everybody? Are we just going to start a swing trade on Fartcoin, or are we just going to wait and see? Maybe tomorrow. Maybe we get a hold level tomorrow. That looks pretty good. And don't retire on Asta. Being very weak. Yeah, might need one more candle. Oh, stop it. Go up. Yeah, trend might be winning. Let's have a look. Still got a bit can go up. It's just sucks. Stuck. This really should push up a little bit more. So what this sort of says is at a bare minimum, we should be revisiting 112.5 and pushing up into that sort of 115 area. It's don't know if you can see this, but if you take the cursor up on this to sort of roughly where the trend is, then it kind of lines up with taking this just to the upside here. And if we bring it down, it would mean taking all of this to the downside. So it looks like this is just floating in the middle between two triggers. And yeah, top side would basically take at least that, get close to that, and yeah, bottom side that. So and this is just a really big version of what we were talking about range creation. So close here, bounce here, then it's here and here and here. That's a pretty good reason for there to be some kind of big push. Does it sweep first? Yeah, maybe. Could sweep all the way down to the hold and then pump. But hmm. Yep. Sometimes it feels like you're playing chicken. You just you know you're pushing into resistance and you're just not quite sure how far you can push it. Yeah, that's good. Starting to push up a little bit on the total, so actual money flow coming in to alts. This is another little just another little weird gap that's been bugging me. Just that candle didn't quite touch that. Makes me wonder where it's going back there. How often do you front run a position? Or I would probably say the way to ask that question is how often do you open up a swing position? Because because you think, okay, well, there's multiple reasons or multiple places price can bounce from, and I guess that example there. Where are we? Is it Sui? No. What were we looking at that was creating? Was it Fartcoin? It's Fartcoin. Okay, so take Fartcoin. You could justify opening a position right here and targeting this level up here. And you've got, say, this level, which is between 0.3667 and 0.3649. So they're so close, I would just start with a little bit of size there. And then down in these areas down here, you've got another couple of refined levels. And I'd be entering more size on those. And based on the market cap, etc., of Fartcoin, I'd probably just put it up just a little bit to make sure they got filled. But not much. Like, what's the level down there? It's 3408. So I'd probably look to go at about 3410, just a little bit. Because I've had issues where if you go like 3408 with a reasonable sized order, it taps 3408, but then when you look at your thing, unless it gets to 3407, it doesn't fill every 3408 order sometimes. So yeah, I'd front run it just by like a tiny little bit. And same with that level down there at 3303, I'd probably go at like 3305. Because the obligation is to bounce off 3303 if it targets that. The obligation is not to fill every order at 3303. So yeah, I'd go a little bit higher. But I wouldn't be too worried up here because the size wouldn't be as big. And if I opened anything up here, it just, again, the size wouldn't be that big because you'd have to make sure that you can bring it back down into the scope of the next one. So yeah. And these orders down here, you'd want them to be sizable enough that this order plus this order, these orders would then need to bring it down below this because the top of the hold level can flip into resistance if it spends too much time down here. So it's all about kind of what you add, where you add it. But the only ones I'd be really front running from a size perspective would be those two. Yeah, not by much. And then stuff like Sol. Levels don't generally get front run on Sol, and there's enough liquidity to fill, pretty sizable orders. What happens is other levels get hit, and therefore you might just not have noticed that there was a level there. So, say for example, don't know this. It looks like the body didn't quite get touched, or did it get touched? I think it did get touched. Yeah, it got touched. Okay, so that didn't get front run. We can make up an imaginary example. Like say the price just bounced off that range trend and you didn't know what a range trend was. You might think that this, and you might think, oh, this whole candle got front run by like, a few cents, whatever. But it's actually just a different level that's bounced, and there's lots of different levels. So where's okay, that one. So that looks like it got front run here, but it'll be something else. Like there'll be, I don't know. Let's have a look. We're on 15-minute. Probably should have put a label on that line, eh? Go back to the 15-minute. Just put, oh, going down again. Okay, so there's a level right there. So you might think this got front run, but what it actually was that bounced. So there's so many levels on charts. And then it didn't get front run because guess what? It came back down here and bounced off it. Just happened later. Well, taking the chases. This is what happens when you chase a pump. Pretty good example too about why you can take profit into break levels and then wait. Okay, so we might be able to scalp this. Very little. Couple of compounded a little bit of money on Sol. BNB's going all right. AI 16 Z's TP. Just gonna size and resize the position on Sol in here, and AVNT looks like it might be about ready to TP. It's done. So that's done. So yeah, the first 6 and a bit hours were really boring, but that's about it. So this will probably go higher as well, but it's just that's all we need. And that's done. Really want this. Just it's bugging me now that I haven't been able to make money out of Fartcoin for 24 hours. And this is just being stupid and weak, but we'll see how that goes. Would you refine that 1 hour hold? Yeah. So I think it'll actually be so we've got the 1 hour hold. We haven't hit the 1 hour hold yet, but we have closed above the 1618 on the 4 hour for range creation. So we might not technically see the 1 hour hold. So the money that I cycled the first time, I've just put it back in. So we basically just keep bouncing. If it goes down $1, great. If it goes back up $1, we'll take it out again. And the backup really is the 1 hour hold, so this level here is capable of actually bouncing. Tesla. Yeah, so Tesla actually played out as per the old BitGet perp contract, real world asset, whatever the heck it's called thing. Um, and so I guess the future implications for that are pretty cool. So much easier to chart that compared to trying to chart that. So yeah, yeah. I'll get Fartcoin. I will make money off Fartcoin. Don't know when, but I will. So, this really just does not want to get through these trends. So that would be that'd be a greedy level on the 1 hour, just that 199.397. You could probably try to go a little bit lower, but you've got trends and all sorts of stuff that might get in the way and stop it getting there. So it's probably not a lot of point in trying to be too greedy. So it's down here. Yeah, that would be roughly a retest of that broken range trend as well. So it's got pretty good confluence on the time frame. 15-minute greedy level equals retest of 1 hour range trend. So if they're going to try and reject, they'll be trying to keep this for the next 19 minutes below the wick of that and under the trend. In which case, take the money back out and then aim for lower. And it could just bounce off that. It's probably hardly worth it, to be fair. They they only actually need to go to 201 to take the last little bits of 100x leverage that's sitting just in here. That's that line. Maybe a little bit lower. 200. Don't know. Just teasing, aren't they? Okay. So that was just a retest of something. Yeah. Maybe not. No, I haven't. No, what is it? Another token. Oh, yeah. That's a wick. What's this thing? Did Marty recommend this? No, I don't like this. No, it's not me. That looks pretty sick. Underneath weekly support. Where's it going? It's got a couple of really cool up facing range trends. Could, if it popped up to the sky and hit that, that'd be great. Okay. Oh, that is actually the top. Mm, no. No, I'm not going to trade that. It's just down. It's just laddering down. Hasn't hit. Hasn't hit any of the break levels. Stuck under range trends. Could long 3 cents, maybe this level down here. Yeah. These things are cool. Time saving. Much time saving. I mean, it would be cool if it came up and retested that at $1.30 randomly. I still find it fascinating how these end up pretty much parallel. Why? No, don't want that one. Although, I suppose what I could do is this. What do I want? Break level. So if I get yep. So if we get a weekly origin level or break level interaction, I'll get an alert. And let's try for daily as well. And same for the daily. So if it does start to reverse on the daily or the weekly, then maybe we can make it quick 1,500%. We'll see. Well, that seems weird, calling a chart my name. There we go. Hurry up. So I'm already long on Sol. I'm looking at, so I've added and compounded a couple of times just as we bounce around for $1 because it's been boring. But I'm looking to TP pretty much if we hit between 204 and 205 and 206, a few different levels that are all kind of up there. And we're getting more and more shorts coming in on BTC. So basically, not a lot of people are shorting Sol specifically with liquidity between 202 and 204. So it's got no real reason to go up by itself. But people are shorting BTC. So based on that, BTC could push up 114.8 to 115 point something. And then it would probably drag Sol up with it. So just I'll add some more if we come down in here and then just TP back up here at 202. Just play it a dollar or two up and down as it bounces around. And meanwhile, just waiting for BNB to come up to the 1618. And I think that's all done. Done. Fartcoin just wants to torture me. And yeah, just waiting for this to come up and hit the break level. It could be that candle could either do it in the next minute or in the next 6 hours. So it's kind of very slow. Who knows? It might create a wick on the top, move the trend, and then just waddle along some more. So it's just all being asked, or it could just go pop and hit the target. So just wait. So I'll kind of want to see that just creep back up inside there in the next 2 minutes. If not, probably just take the compounding money out again. Wait, see if it goes lower. But BTC does look like it's pushing up. Drift. As in the exchanges or the tokens? Tokens. Okay. Give me 1 minute. I'll just wait for this. Press a button or don't press a button. Yep. Down. Yep. There it goes. Okay. What are these tokens? Uh, yeah, that didn't. I mean, it bounced on a weekly support, but it didn't go very far. So it's yeah, that doesn't look so great. I mean, it might bounce. So it might bounce the range trend from here. First touch. Depends kind of how long it takes for this to play out, but the the range trend may just travel back to the hold. And then of course you've got the origin level that's down the bottom here has already bounced. That was its first bounce. That was kind of like the high probability move. And yeah, that was a decent move, 44%. But what it hasn't done is it hasn't created a hold level. So the bottom of the range has been tested. The origin level has been tested. It hasn't created a new hold level. Unless this actually, bounces off the range trend, which is possible, and then closes up for the week, I would be not looking. It's not looking so flash, but it could do that. It could bounce off that range trend, travel to that one, and by traveling to that one, it's actually closed up, and that creates. Well, actually, it can't really. Can't create a hold level. Looking at that. Not ideal. Tradable, maybe. Range trend to hold. Yeah, not totally flash. Yeah, it's a big weekly hold candle up there too. And it looks like it's trying to close under the range. Yeah. It's not the kind of thing I'd be thinking is going to go up long term. But if there was ever a risk reward time to buy it, this is pretty much it. This is the bottom of everything on the weekly. If it recovers from here, you've got a great entry. And what's the other one? KMO. So that looks a little bit, at first glance, more like accumulation. Cool. And that is the top. That looks like that was a sweep at the bottom. So, yep. So this has held the range trend. It's tested the hold level, so it's trying to break the hold level. Looks like it's trying to break the interior downtrend. This is definitely healthier looking than the other one. Yeah, and this is untested origin support down here. So this has got like one of those bases that can bounce, whereas the other one's got a base that has already bounced and hasn't led to a hold level. So technically this hasn't led to a hold level yet either, but it would have one more opportunity to do it. If it closed over that that level there, whatever that is, if it closed over 0.07769, that top origin level, then there's a pretty damn good chance that the thing just blasts all the way up there to that break level, 12 cents. Because this is on purpose, this wick here. This candle has tested that hold. So that hold's done. All of these holds are done. This is the one that's trying to send the price down. And if it loses that, there's only a single candle there, so there's no break here. And you just got that origin. So it's kind of, that could pop if it just got through that hold there. Bang. So that looks a bit better. Obviously, the risk to reward on this would still be to try and get it if it did a dip down to that sort of 5-ish cent area. Grab those levels. 44791 would be really awesome. If it hit that, it should have a bounce, and then if that bounce led to a hold level getting created, and then that hold level laddered, and it got over the origin level, then it would pop. So it's not bad. Good risk to reward trades are pretty much when you um, refine a higher time frame entry to a lower time frame. and then enter on the lower time frame. And if the trade plays out prior to it hitting your entry, then just don't take the trade. That's pretty much good risk reward. So it's, you might not take so many trades because some of them will just happen before you even get in. But yeah, or just first touch origin level bounces on 1 hour or 4 hour time frames. They're going to be really good risk reward. So you just take. Something like. Should we look at Zeus? Okay. So this trade, I mean, this is a weekly, so it's probably not the best example, but structurally, it's just this kind of thing where you've got a tested break level, accumulation, later on, price comes back, long it, back to the first hold. You can be pretty tight on your stop losses on these, or if you're really risk adverse, you can just go 1-to-1 and just double your money on every single one. So that would be like doing, so have a wider stop loss and just work on doubling your money. So just go like this and just take it back to the first hold underside of that top candle. Close enough. You get what I mean. And be all risk adverse and just go 1-to-1. And just take that level back to there. And as you get more confident, what you can do is start tightening up your stop losses because you know that it's not going to go very far below the line. And then your trades will get bigger, or your reward will get bigger. And then just try to find the next one. This could be not that one. So it might be a short somewhere. This thing's toast. Shouldn't laugh. Here's another one. That one would have absolutely destroyed you. That would have stopped you out. Almost certainly. I think. Let's have a look. Yep. See, good reason for a stop loss. I wonder why that one didn't. Yeah, I don't know why that just went straight through like that. Oh, of course, yeah. Because you don't tend to get that kind of thing happening on something like Sol. But where are we? Well, you could probably even try on ETH. Interesting that just same sort of time, whatever was happening there. So on ETH it would have been that long, these candles. So there's your hit, there's your fail to distribute back, there's your entry, that would be your TP. So you could have got that one. It came back again, so you could try to take it again, but you generally only take it one time with confidence, absolute confidence. But it did hold it again. And it closed underneath. Closed underneath. There you go. So if you wanted to like refine it to a lower time frame entry, just to get sort of a bit of a deeper, more precise entry, you could flip down to a lower time frame, find the thing that started it on like the 1 hour there, and then you could take that one. And then there's probably going to be another one there. Down below, back up, recovered, entry. So these will just ladder. So they'll just keep on, there'll be another one and then another one and then another one and another one. So you just keep following the ladder and just keep on. Like that's not one, that's not one. So it's going to be over here. There it is. Oh, no, that's not actually it. It's not it. It's pretty close. Probably a slightly different time frame. So 1 hour, so try 4 hours. See what's on the 4 hour. Yeah. So they're on the 4 hour as well. Yeah. Or there on the 4 hour. So yeah, that would be what I would try. Just basically origin level first touch bounces 1-to-1 your money. Once you've say if you start with $1,000, once you've got to $5,000, take 2,000 off the table, which kind of allows you for a screw up or something, and then take your 3,000, turn it into 6. Take your maybe take 2 off and then turn your 4 into 8. Then take 4 off and just do that a few times and big bag pretty quick. And all you really need to do is just identify first resistance and well, the other thing you can do is you can risk less, but just go tighter stop losses so that you don't lose as much if it does hit your stop loss. But just take a long there. That's your first resistance there, and just go maybe just under there. And all you're trying to do is basically capture that bounce there to there. But it's a 1 to 2, so somewhere there'll be a where are we? And then they'll basically keep evolving, so then there'll be a daily one somewhere. Probably might not have even got back to that. No. That would have probably stopped you out. Oops. Yeah. I mean, if you did it very safely as a 1 to 1, would have been absolutely fine. If you were taking it with anything more than about a 1 to 2, even as a 1 to 2, it probably got you. Maybe. I don't know. As a 1 to 2, you would have been alright. It creates another one for the future somewhere. So that's that one. So, yeah. So you could have taken that. You take that as a 1 to 1, double your money again. Wouldn't have stopped you out. Yeah. That would be the. Hopefully that answers your question. Identify those, trade those, choose your own risk tolerance and the probability of those trades winning very, very, very high. That's the actual type of trade. Like if you ever hear about people doing the whole, you know, $1,000 to $100,000 challenges and that kind of stuff, they're the ones you want to take. You just do it in a fashion of start with $1,000 and then turn 200 into 400 and then 400 into 800 and then so on. And as it gets bigger, you just park some of the money. so that if you just get that one freak occurrence where it just goes through and works out that trade, you haven't been like you can go you can go solidly casino and just go double 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 and just keep going, and it doesn't take many if you do it that way, but it's but you'll just get that one freak occurrence and you'll be back to zero again. So stupid magnet tool. So another one. Yep. Oh, there you go. That one got you. That one you won. That's getting pretty condensed, but still won. So hmm. Hmm. Well, I think it might be sleep time. It's 11:30. And I think they're just going to keep stuffing around with this. So one of those this level up here, this 203, 240 on the 1 hour. That's becoming one of those rejection levels like what we've just been showing the trades on. So pretty good chance that that's going to be a top now. And this is kind of like, these are the opposing levels down here. About 198. So the good news is that the range is getting wider. Bad news is that it's still kind of stuck in a couple of dollar range, but we'll see. Wake up in the morning, higher or lower? In the Discord. 10.5 hours, but he's just keeps going. No, I'm going to sleep. Good night, everybody. Thanks for the likes. It's awesome. Catch you again when I wake up tomorrow sometime.